Hello people, let's continue our marathon discussion. Next, now we are reviewing working capital management. So again, probably in terms of the sheer length, probably a biggest topic that is there in our FM syllabus currently and has a significant weightage in exam as well. Usually you can expect anywhere between 6 to 10 marker to come from this particular topic. Most of the attempts it does come. Okay. All right, let's see what we can learn from this particular chapter now. Okay, first, working capital management. So, as the name is suggesting, first of all, how do you get working capital? Current asset minus current liability. So, in this topic, effectively, we are managing current assets and we are managing current liability. That's all we are doing over here. Why we do this is, we have to manage current assets or current liability, or rather we say working capital management is a trade-off or a balancing act between liquidity and profitability. You're trying to get the balance of liquidity and profitability right. That's all is about working capital management. More about this I'll talk about in a minute. Now before that, if you want to look at working capital, you can assess it or look at it from two angles. One from time angle, one from value angle. If you are assessing from value, working capital can be defined as gross working capital or net working capital. Gross working capital means only the total of current assets. Current assets ka total if you do, that number we call it as gross working capital. Net working capital means current asset minus current liability. This is from value angle. From time angle, if you are assessing working capital, it will be permanent working capital or temporary working capital. Permanent and temporary. Permanent means, some people or many organizations will maintain minimum balance of cash. Like ArivuPro maintain 50,000 cash balance every month. Will it come below that or 50 every month? So that 50,000, which is it's what, temporary or permanent number? That we call it as permanent working capital. That portion of current assets and current liability which we maintain throughout, we call it as permanent. Something which is not permanent automatically becomes temporary working capital. Okay. Next, I've written all the things in the chart book. I'll only cover the exam related things over here. Don't feel if I'm missing few things. Few theories are not that very important. So, but still I've written. So now we'll be only covering those important aspect. Okay. Now, when we said working capital, we said we are managing current assets and current liability. Why do we need to manage that? Now, if you have to say closing stock, is closing stock part of current assets? Yes. Now, what happens, people? Let's say I used to give the same example in class. So, there is a tomato vendor, tomato dealer who sells the tomatoes. Normally, he stores how many kgs of tomato? 50. But one fine day, he is starting to store 200 kgs. Instead of 50, he purchased how many? 200 kgs. So, stock significantly increased from 50 to became 200. Tell me, is there any advantage due to the increasing the level of closing stock? Any advantages there? Yeah, earlier he was able to sell only how many? 50. Now he is able to sell 200. That means he'll be able to keep up the demand. If there is a demand for 200 kgs, then he can sell 200 kgs. So, if he can sell more, this particular person will get more profit. Higher sales will lead to higher profit. So, due to this decision, profit may increase. Advantage. At the same time, is there any disadvantage? What will happen? Sir, if he is not able to sell the tomatoes, tomato is a perishable product. So, if he is not able to sell the tomato, what will happen to the tomato? It will get perished. Right now. So, if this tomato gets perished multiple times, then a small business can survive or business will be shut down. That only we call it as the business shutting down risk, only we call it as liquidity risk. Now, due to this particular decision, liquidity risk has reduced or increased. Increased. Right? Due to this decision, profit may also increase, but at the same time, business shutting down risk also is increased. This particular level ka balance we are trying to maintain. We want to earn profit also, but at the same time, we don't want to take too much of business shutting down risk also. That's all is working capital management. Hence, we need to manage the current asset in the form of inventory. Similarly, debtors. Let's say people earlier we used to give a credit period of how many days? 30 days. Now we extended and made it as how many days? 90 days. Instead of giving 30 days credit to our debtors, now we are giving 90 days credit. Now debtors are sad or happy now? Happy. Earlier they had to pay us within 30. Now they will pay us within 90 days. So if you give more credit to somebody, they will buy less from us or they will buy more? They will buy more. So if they are purchasing more, rather we are selling them more. So due to this decision, what will happen to the sales? Higher sales. Higher sales will lead to higher profit. Advantage. At the same time, what are the disadvantage? Now people, earlier my fund used to get blocked only for 30 days. I used to collect the money within 30 days. My fund blockage days was only 30. Now my fund is getting blocked for 90 days. So my funds is getting blocked for higher number of days. And earlier, I used to get the money within 30 days, means my bad debt was okay. Now I have to wait for how many days? 90 days. That means I have to wait for how many extra days? In that 60 days, the person may leave the country. It only takes 6 hours to reach UK. You know who? Yeah, right. So that means due to this decision, my bad debt risk has increased. Correct? No, because I have to wait longer, and within the longer duration, if debtor ka business gets affected, means my amount will become bad debts. If more and more debtors become bad, means can my business survive or business will shut down? My business will shut down if more and more bad debts, if I suffer. Yes. So accordingly, what will happen? Liquidity risk will increase. So due to this decision, there is a higher profit case also, but at the same time, there is higher liquidity risk also. So you can't blindly give credit to somebody. You will have to be a little thoughtful. How much credit to give? So you need to manage them. Fine. All right. Similarly, creditors. Now people earlier, where it went? Earlier, let's say we used to pay the creditor within, let's say 30 days. Now we are delaying the payment and making the payment on the 70th day. Creditor ka credit period is how many? 30 days. Creditor gives a credit period of only 30. Purposefully, I am delaying the payment and making it to 70th day. Creditor is asking me, what am I telling? Tomorrow. I will pakka pay tomorrow. Tomorrow again I will say, pakka tomorrow. Same dialogue. Politician have become. Okay, na? Alright. Now tell me, due to this, is there any advantage? Earlier people, I used to pay the creditor within 30. Now I am paying within 70. That means how many extra days I am taking? That means for that 40 days, I can use this money to run my own business. By delaying the payment, I can use that money for my own business purpose. That means, and am I paying any interest on this? No. So it acts as what? Free source of finance. It's like I got money from creditor. I got a loan from creditor by paying interest or freely. Freely. So that is your one of the advantage. Any disadvantages there? Huh? Sir, if you go on telling tomorrow pakka, your words will have value or it will lose. So there will be a loss of goodwill. People will not trust you anymore. Now you are playing games, only you can play, na? Creditor also will play. Tomorrow, wah, macha, wah. He will say, okay. Till now, I used to supply the goods to you at 10 rupees per unit. Till now, how much? 10 rupees per unit. From now onwards, 20 rupees per unit. Yes, no, because you irritated him. Now, he is returning the favor. So, what can happen? Creditor may increase the price of the goods, or creditor may tell, henceforth, no more credit for you. Pay cash, take the goods. Otherwise, get lost. Or he may take an extreme decision of stopping the transaction with you altogether. Yes, people. So these are all some of the disadvantages. So blindly, can you delay the payment, or you need to be a little careful around it? So that means creditors also you need to manage. That is what we are doing in this particular topic. Managing current assets and current liability. Because by managing them, there is a scope to increase the profit. But at the same time, there is also some liquidity risk. Understood, everybody? Okay, next. In this particular chapter, usually around 5 to 6 varieties of question gets asked in the examination. I'm talking about 5 to 6 problems, 5 to 6 varieties of problem. Under each category, we have we have many questions. So now for each category, I will take 1 or 2 questions depending on availability of time, and we will learn. Okay, sir? All right. First is something called operating cycle. Operating cycle means what, people? You have studied, you have revised also, and then only you have come, correct? No. What is operating cycle? Chorus venda. Little louder, sometimes my hearing comes and goes. So little loud, little clear. It's a time, sir. If you are a trader, what is your main business? What will be your business? If you are a trader, not a manufacturer, if you are a trader, what you will do? Purchase the goods, sell them. Will this happen within one day, or it will take some time? When you purchase the goods, you will have to pay the money. When you sell the goods, you will recover that money. That duration only we call it as what? Operating cycle. As sir pointed out, what's your name, Acha? Huh? Surya. As Surya told, it's a time gap. Operating cycle is simply a time gap between payment and receipt. Payment and receipt. That particular duration only we refer it to as operating cycle. That's what I've written over here. It's a time gap between the day you purchase the goods and make the payment till the time you sell the goods and recover your money back. That particular duration, that could be 80 days, 40 days, 140 days, 300 days, doesn't matter. That only we call it as what? Operating cycle. If you remember a regular class, I used to draw timelines and give you the example. But now let's not go into timeline. We find operating cycle through a small formula. What is that formula? R plus W plus F plus D minus C. R for raw material holding period. W for work in progress holding period. F for finished goods holding period. D for debtors collection period. C for creditors ka credit period. If you do this automatically, you will get operating cycle. Let's say operating cycle, you applied this formula and you got it as 100 assumption. 100 days. What it means is 100 days your funds are getting blocked. For 100 days your money is getting blocked. Meaning if you purchase the goods today and make the payment, you will be able to recover that money only after 100 days. Okay now? Now can I tell my employees, Macha, my money is getting blocked for how many days? 100 days. I will pay salary after 100 days. Can you tell the employee? Employee wants the salary every month. Landlord wants the rent every month. But I have money or my money is blocked for 100 days. My money is blocked for 100 days. What to do? I have to take a short-term loan. I have to take a short-term loan to run my business. That is the significance of calculation of this. Yes, sir, people. Okay, done. This is one no. Maybe I think we have a question, or maybe this also I will take up. Sir, people, again, maybe one more point too. Sir, what is the ideal operating cycle? What is the ideal number for operating cycle? 10 days or 40 days or 400 days? What is the ideal operating cycle? Is there any magic number? No. So there is no magic number for operating cycle. It depends on the business. Like if you are a builder, what do? You build the house or an apartment and sell it. Can you make the building within 1 day, 1 month or 10 days? No, that means to convert from raw material to finished goods. Your building is your finished goods, no? That process only will take 1 year. Correct? That means all this only will be how many days? More than 365 days. After that, you have to find the customer and collect the money from customer. Yes or no? That means if you are in the real estate business, your operating cycle could be really high. Maybe 400, 500, 700 also depending on the project. Because some projects are really big. You'll construct 3,000 house apartments and all that. Those are big projects. So your operating cycle may be really high, really long. But at the same time, sometimes your operating cycle could be negative also. It could be really negative also. How? Sir, if you are a supermarket, like Reliance and all is there, no? Reliance and what and all mega, what and all marts are there over here? D-Mart, Reliance, so whatever else is there. Now you tell me, will they have raw material? No, they are traders, right? They buy and sell. So will they have work in progress? No. Let's say finished goods. So they feel they will be able to sell within 10 days. If they buy the product, if they purchase the product, they'll be able to sell it within 10 days. Assumption. Will they give any credit to that? D for what here, people? D here is what? Debtors collection period. Now, when you walk into a D-Mart, you are a debtor or you are a customer. Will you get any credit or cash and carry system? You pay cash, you take the goods. So, is there any debtor credit period here or zero? Because they don't give any credit. They operate on a cash sale mode. But creditor, they may argue, since they buy in bulk quantities, they may tell the creditor, I will buy from you only if you give me 70 days credit. Only if you give me 70 days credit. Possible, no? Because they buy in huge quantity. So they will have bargaining power. Now calculate operating cycle for me. Minus 60. That means D-Mart is operating badly or good only. So operating cycle sometimes could also be negative. Just because it is negative does not mean it is bad. Okay. So you always need to analyze operating cycle, compare it with the industry. Suppose there is another supermarket, their operating cycle is 250 days. Now tell me, good or bad? Reliance or your DMart is having operating cycle in negative. But another supermarket is having how much operating cycle? 250 days positive. You expect supermarket to have a long operating cycle or short? So if this particular supermarket is having a long operating cycle, means they're doing good business or bad business? Bad business. So like this, you have to, there is no magic number. You can analyze good or bad only by comparing with the industry standard or with your competitor. Done with this, huh? Okay, now people, one more is there. Oh, again, I'll run you through this. If this question comes, mostly it will be for 2 marker. We have done one question in regular class. I think theory is good enough for now. There are 3 approaches for working capital investment, or you can say current asset investment. There are 3 approaches for current asset investment called aggressive, conservative, moderate. Aggressive, conservative, moderate. In conservative approach, remember because when they ask you the question, you need to know this portion alone. Okay, this portion, both if you know, you'll be able to solve that question if it comes. If it is conservative approach, conservative means we want to take more risk or less risk? Less risk. So what we will do in conservative approaches, current asset we will maintain at highest level. What? We will maintain current asset at highest level because we don't want to take risk. So we will maintain high amounts of cash, etc., etc. So at conservative level, current asset will be highest. Risk, we are taking too much risk in conservative or less risk? In conservative, risk will be less. Since risk is less, return will be more or return will be less. Return will be less over here. So just remember over here, in conservative approach, current asset will be highest. Risk will be highest or lowest? Risk will be lowest. What about return? Return highest or lowest? Lowest. Opposite this will be aggressive. Build the things for me. If you're following aggressive current asset investment policy, then current asset you will maintain highest or lowest? You will maintain lowest. Risk will be, you will take, since aggressive may you are taking more risk, so risk will be highest, and as well as the return will be, if you are taking high risk, you will expect low return or high return? High return. These are the things. Okay, people, what they will give us, how the question can come is, they will give you 3 levels of current assets. They will give you 3 levels of current assets. Let's say 10 lakh, 15 lakh, 20 lakh. Now you tell me, for which policy, which current assets will hold good? They will give you, they will not tell you aggressive, conservative. They will not give you for aggressive how much is current asset, for conservative how much is current asset, moderate how much is current asset. They will only give you current asset ka amount. You need to identify which current asset belongs to which level. Now you tell me, this particular 20 lakh belongs to which current asset level? Moderate, conservative, aggressive? And conservative, you will maintain highest level of current assets. Which is the highest level here? In 10, 15, 20, which is highest? 20. That means this belongs to conservative policy. In aggressive, you will maintain the highest or lowest? Which is the lowest here? 10 lakh. That means this belongs to aggressive. Moderate means somewhere in between. Then you need to solve the questions. Okay, now people, this is one type of question which can come for 2 marks if at all they want to ask. Okay, G. Next, first type of problem is working capital estimate wala problem. Working capital estimates wala problem. Or 1 minute, let me just see if before that if I can cover anything. Or no, I think I'll do of this only, it's fine. So first type of question we are venturing into now is what, people? Working capital estimate. How do you get working capital? Current asset minus current liability. So in this problems mein, or in these set of problems mein, current assets and current liability ka components we need to estimate. What are some of the examples of current assets? Cash, closing stock, debtors, all this will not be given. We need to find out. Similarly, current liability ka components are what? Creditor, outstanding expense, etc., etc. All that will not be given. We need to find out. And from current assets, if you reduce current liability, you will get working capital. That's that wala problem. And this is one popular question ICA asked for 8 to 10 markers. 1 or 2 questions can we run through first? Okay, so for that, first I'll just take you through small pointers which I've written, which you remember this format we used to follow in class. Every problem we have solved almost in the same format. in our regular class. Once I'll walk you through this format and then take up a couple of questions in this thing. Normally, first working note. Sir, it's not mandatory to follow this format. It is just that for all our problems, we have solved in same format. So hence I would like to revise in the same format. But you are free to solve in any other way if you're comfortable also. So first working note is work in progress or WIP. How do you find out WIP is? People, they will give you annual raw material consumed. No need to copy this. Just listen. We can take you through the question also. First, you need to get annual raw material consumed. It will be given to you in the question because raw material we will not sell. We will consume. For what purpose? To produce finished goods. They will give you annual raw material consumed. Now, this annual raw material consumed, is it for 1 day or whole year? Whole year. So, suppose they give you this to be, or is it okay? I'll just run you through this format right now and directly take up one question numerical than spending too much time in explaining this. Would you be okay? Okay, quickly I'll just orally take you through this now. Suppose raw material consumed is 10 lakh. Raw material consumed is how much? 10 lakh. It is for 1 day or whole year? Whole year. Whole year means how many months? 12 months. Whole year your goods will be in process. Work in progress means the time taken to process the goods. From raw material to get converted into finished goods, how much time it takes. That could be what? Maybe 10 days, maybe 1 month, maybe 2 months. But this particular 10 lakh value, is it for, let's say work in progress holding period is 1 month. How much? 1 month. But this value, how much we took? 10 lakh. 10 lakh is for 1 month or whole year? Whole year means how many months? 12 months, right? So 10 lakh is a value for 12 months. What is your work in progress holding period? 1 month. So multiply by that. You will get what? Work in progress value. Done, Aji. But work in progress means, is it 100% complete? If it is 100% complete, it is not WIP. It will become finished goods. Hence, we have to multiply by something called as DOC. DOC means degree of completion. That they will tell you in the problem. It could be 8%, 20%, 100%, whatever. Okay. If they don't give degree of completion, for raw material, we always assume DOC to be 100%. For others, we assume it to be 50%. This is a convention. If they give DOC, take that. If they don't give DOC, degree of completion in the problem, for raw material, 100%, for others, 50%. So that means you will multiply your DOC percentage, which could be 100% or whatever, or 50 or whatever. Fine, now people, any issues with this so far or sorted? Sorted. Okay, next. Now people, for work in progress means you're processing the goods. For processing the goods, you only need a raw material or you need workers also to participate. You will incur material cost also. You will incur wages and other manufacturing cost also. That we call it as conversion cost. We call it as conversion cost. So that means to get WIP, we not only need a raw material, we also need a conversion cost. Now, tell me conversion cost ka work in progress value. Same way. You will take annual conversion cost. That they will give it to you in the problem. Okay, annual conversion cost, but that will be for 1 day or whole year. So take the annual conversion cost and divide it by 12 or 365 or 52 depending on how the data is given in the question. Multiplied by work in progress ka process period. 1 month or 2 months, it will be mentioned to you in the question. Multiplied by DOC. DOC is degree of completion. For conversion cost, DOC not given means we will take it as 50%. By doing this, you will get closing stock of WIP. Okay, Sarji. Pakka. And we'll again go through this one problem also. Next, you take the cost sheet format to get the data. Not the full format. Oh, little bit is good enough. First, cost sheet. May you start with your direct material. I know you have direct material, then you write prime cost and all. We don't need all that. Direct material consumed you start. Then labor and overheads. By adding all this, you will get your factory cost. Because I'm adding your overheads also. I don't want prime cost. It's not exact cost sheet format. I'm using that format to get what? Debtors. So first add your material consumed, labor cost and overheads. Okay. Then you'll get what, people? Factory cost. Okay. Now one thing you need to keep in mind is, sir, we do working capital estimate under a cash cost approach. What approach? Cash cost approach. Cash cost means we will take all the cost or only those costs which we are settling. Only those costs which are paid is considered. That's what we mean by cash cost. So we will include depreciation under this approach or we will exclude? Because depreciation is a cash expense or non-cash? Non-cash. So hence whenever they give you overhead, you will include depre or exclude depre? Exclude depre. Provided you are solving under what approach? Cash cost. There is another approach called total cost. There is another approach called total cost approach. In total cost approach, depre will be excluded or included? Included. By default, working capital estimate problems we solve under cash cost. We will use total cost only if the question mentions. If question specifies total cost. Otherwise, by default, what approach? Cash cost. So overheads and all will be, or depreciation and all will be included or excluded. Okay, suppose they will tell in the problem overhead cost is 60. This includes depreciation of 10 per unit. So you will take 60 or 50 now. 50. If whatever depreciation is included, first you have to exclude them and take it. Okay. So adding all this, you will get factory cost. From factory cost, what do? Add opening stock of WIP, reduce closing stock of WIP. You will get the cost of production. To this, you add admin expense, add opening stock of finished goods, closing stock of finished goods. You will get COGS, cost of goods sold. To this, add selling expense. You will get cost of sales. Okay, now people. Everybody good, people. And now, debtors is related to total sales, credit sales. So till now, what have you got? Annual cash cost of sale. But don't forget, this is a working note to find what? Debtor. Debtor is related to total sales or credit sales. So that means from annual cash cost of sale, what do we need to arrive? Annual cash cost of credit sales. Annual cash cost of credit sales. Take this number. Suppose this number is 10 lakh. Suppose this number is 10 lakh. Look at this first line. What is this? Annual. I mean, this 10 lakh is a value for, this 10 lakh is a value for 12 months. Do you give 12 months credit to your debtors? No. Let's say debtor credit period is 2 months. So what do? 10 lakh is a value for 12 months. How much for? 2 months. Accordingly, will be your debtors. Fine, people. Any problem, people? That's what I've written here. It has formula there. Take the annual cash cost of credit sale divided by 12,365 or 52 multiplied by debtor ka collection period. That way you will get the value of debtors. Done now. Correct. Now one doubt you may have, sir, this is cash cost of sales, sir. This is not sales, sir. This is not credit sales, sir. This is cost of credit sales, sir. Debtors, do we sell the goods to debtors at cost price or selling price? I mean, you should take sale value and get debtors, sir. You are taken here cost of sale and getting, sir. That is wrong, sir. We are solving working capital estimate. Just before this, we did operating cycle. If operating cycle is 100 days, what does it mean? If operating cycle is 100 days, what is the meaning of that? For 100 days, my funds are getting blocked. 100 days, my funds are getting blocked. Now, people, in order to sell the goods, to debtor, first we need to purchase them. You will purchase at selling price or cost price. You will purchase at cost price. So your fund will get blocked to the extent of selling price or cost price. Because you did not invest selling price. What did you invest? How much money you put in? To the extent of cost price. Hence we take cost of credit sale and arrive the debtor and not the sale value. Agreed? Everybody good? So that's how you get the debtors. Yeah, and that's what I've written over here. Okay, just tell me both the formats once, everybody. Let's see. Work in progress ka format. Tell me. Visualize. Work in progress means, is it 100% complete? No. Whatever. 40, 50, 70. It's not 100% complete for sure. It is lesser than 100. Could be 80, 70, 10, 15, whatever. Okay. To get work in progress, you need raw material also. You need labor cost also. You need manufacturing overhead cost also. Right now. Right. This labor or manufacturing overhead, we call it as conversion cost. Right. So tell me, how do you get closing stock of WIP? Take annual raw material consumed. It will be given to you in the question. That it's annual raw material consumed means it is on which platform? Whole year ka platform. Take annual raw material consumed divided by 12. Multiplied by work in progress ka process period, which will be given to you in the question. Multiplied by DOC. DOC means degree of completion. For raw material, DOC is always 100%. If it is not given. And then conversion cost. How do you get conversion cost? Take annual conversion cost divided by 12, 60, 365 or 52, how the data is given in the question, multiplied by work in progress ka process period, which will be given to you in the question, multiplied by DOC. DOC of conversion cost, if it is given, take it. Otherwise, 50% is the convention we assume. Adding this, you get the closing stock of WIP. Same way. Next working note is to find out debtors. Now debtors we follow cost sheet format. First, raw material consumed, then labor cost, then manufacturing overhead cost. Adding all this, you will get factory cost. But keep in mind, overhead cost should be excluding depreciation because we are solving under cash cost approach. Okay. From factory cost, what do you do? Add opening stock of WIP, reduce closing stock of WIP. You will get cost of production. To this, you add admin expense, add opening stock of finished goods, reduce closing stock of finished goods. You will get COGS, cost of the goods sold. Add selling expense. You will get cost of sales, annual cash cost of sales. We want cash cost of sale or cash cost of credit sales. Cash cost of credit sales. They will mention to you in the problem. They'll give you some data. Then using this as a base, get the data. This annual cash cost of sale represents how many months? Whole year. Take this number and multiply by the what? Debtors ka collection period. Accordingly, you will get the debtors. Okay. Alright. Next working note we usually prefer to put as the creditor. Okay. Now, they would have given raw material consumed in the question. Raw material consumed. Now you tell me, raw material consumed is connected with creditor or raw material purchased is connected? We want annual raw material purchased, but they have given annual raw material consumed. From consumed, how do you get purchase? From consumed, how do you get purchase? It's like a COGS equation. How do you get COGS? Opening stock plus purchases minus closing stock. Cost of goods sold. Raw material you will not sell, you will consume. So instead of COGS, right, raw material consume. Now this data given, this data given, this data given, this data given. Can't you find purchase? Rephrase the equation for me. How do you get? So if you want purchase, so it will be raw material consume. Set closing stock you add, opening stock you minus. That's what we have written. Take raw material consume, add closing stock of raw material, deduct opening stock of raw material. What are you going to get? Annual purchase of raw material. Any problem? Now this is annual purchase of raw material. Suppose you get this to be 10 lakh. This 10 lakh is on which platform? Whole year. That is 12 months. Do we get 12 months credit from our creditors or lesser? Let's say credit period of creditor is 3 months. So what you will do? This 10 lakh is annual raw material purchase, meaning it is for 12 months. How much credit period are we getting from creditor? 3 months. Multiply, you will get the creditor value. That's what I've written here. Annual raw material purchase divided by 12, 360 or 52 multiplied by creditors ka payment period. If you do, you will get the creditor ka balance. Okay, na Sarji? These are the 3 working notes which will come in every problem. Then your estimation of working capital wala statement. Okay, sir. Now you'll have to show all the current assets. Some of the breakup of current asset is what? Closing stock of raw material, closing stock of WIP, closing stock of finished goods. Then debtor. Cash will be given to you here directly. You don't have to estimate. But don't forget prepaid expense. They'll give you some data. That prepaid expense and outstanding expense will differ on the question to question. We'll read the question, we'll figure it out. Okay, this is your total current assets. In current liability, there will be creditors and some outstanding expense. So from total current asset, if you reduce total current liability, you will get working capital. But here they also say maintain some safety margin. About this, I will take you through some problems. There could be one adjustment and safety margin also can be asked. So you just need to add safety margin as given in the question. Then you will get net working capital. That's a format. Done now. Can we take up 1 or 2 questions quickly just to apply this? No, where is it? 1 minute. This is little big. Okay, maybe we'll take up question number 3. It's there in study material also. Look at this question. You can keep your calculator. No need to worry about your study material things. Just keep your calculator and keep calculating for me. That's good enough. Okay. On 1st January, Managing Director of Noreen Limited wishes to know amount of working capital that will be required. So you need to prepare working capital requirement wala forecast. Working capital estimate wala problem. Production during the previous year was 60. it is planned this level of activity would be maintained in the current year also. So current year also, how much are we planning to produce? 60,000. Same like last year. The expected cost to selling price are raw material 60%, wages 10%, overhead 20%. What they are saying is, of your total selling price, 60% of the selling price is raw material cost. 10% of your selling price is wages cost. Overhead constitutes 20% of the selling price. Do you know selling price? Somewhere at the end, they will give a check. What is the selling price? Sir, if you know selling price, can't you find out raw material cost per unit, wages and overhead? Check here. Selling price is 5 rupees per unit given. Therefore, raw material cost will be how much? 5 ka 60%, which is 3 per unit. Wages is 10% of selling price. 5 ka 10% is 0.5. Overhead is 20% of selling price. 5 ka 20% is 1 per unit. Figured out, huh? Alright. Next, I'll go through the questions fully once. Raw material are expected to remain in store for how many months? 2 months. So, raw material ka holding period or raw material ka storage period is 2 months. Okay, let's keep this in mind. Each unit is expected to be in process. Process andre WIP for how many months? So, WIP ka process period is 1 month given. A raw material being fed into pipeline immediately. Whatever raw material we need, we will put it in stages or full raw material one go. Means indirectly they are telling DOC of raw material is 100%. Because whatever raw material you need, fully you will put it. Not an installment. 100% you will insert before the process. Labor and overhead accrue evenly during the month. DOC given or not given? DOC, this is your conversion cost, no? Conversion cost ka DOC mentioned or not? That means we will take how much? 50%. Finished goods will stay in the warehouse awaiting dispatch to customer approximately 3 months. So, finished goods ka storage period is 3 months. Credit allowed by creditor is 2 months. Credit given to debtor is 3 months. Selling price 5 per unit. That's okay. Wages and overheads are paid first of each month for the previous month. Previous month ka wages will you pay that month only or next month? That means 1 month, can I say wages and overheads are, if there is a delay means it is prepaid or outstanding. So, we have outstanding wages and outstanding overhead for how many months? 1 month. Done, Aji? Because you are delaying this month ka wages, you are not paying this month, you are paying next month. Hence, 1 month ka wages will always remain outstanding on an average. Both wages as well as overhead. Keep cash in hand to the extent of 20,000. Safety margin or contingency, anything referred? No. Maybe it will come in next problem. Okay, Naji? Now, in some problem, work in progress will not be there. In that problems, working note number 1 we discussed in format. You can cut it off. Here we can cut it off or it is there. It is there. Okay, walk me through now. Tell me. Calculate for me. First, you take what? Annual raw material consume. 1 minute. Do you know raw material cost? How much? 3 per unit. How much you are planning to produce? 60,000. Right? Okay. How much is the, for 1 unit raw material cost is 3 rupees. For 60,000 units, how much? 1,80,000. 1,80,000. Correct. But that 1,80,000 is for 1 day or whole year? Here, some problem people, they will give data in days, some in months, some in weeks. Here, how are they again? Months. I mean, what is the number your calculator showing? 1,80,000. That 1,80,000 is for the whole year. That is how many months? 12 months. Divide by 12. Okay. Now, multiplied by work in progress process period. Work in progress will have how much processing period they told? Work in progress processing period is 1 month. So, multiply by 1. It's as good as same. Okay. And raw material ka DOC is 100%. Multiply by 100. 100% it is actually not, don't multiply by 100. It's 100 by 100. How much are you getting? 15,000. Got it, huh? Everybody good? Yes. And now conversion cost. Conversion cost, they have given conversion cost or they have given breakup. We have labor also, we have overhead also. So take same thing. What is the number of units? How many units? 60,000 units. So what is your labor cost per unit? 1 minute. Labor cost per unit is how much? 0.5. Multiply 60,000 into 0.5. 30,000. That is for 1 day or whole year. So divide by 12. Right? Multiplied by work in progress process period. How much is work in progress process period? 1 month. So multiply by 1. Okay. Now DOC of conversion cost given or not given? Not given. So what is the percentage? 50%. 50% means 50 by 100 or 0.5. How much your calculator is showing? 1250. Same number. Okay. One. That's it or one more? One more. What is that? Overheads. How many units? Now we'll do it directly. How many units? 60,000. What overhead cost per unit is 1 rupee? Okay. 60,000 into 1. 60,000 into 1. That is 60,000. That is for 1 day or whole year. So divide by 12. Multiplied by work in progress process period, 1 month. Multiplied by DOC. What is DOC? 50%. Multiply 50%. Clear? So that means what is your total work in progress or closing stock of work in progress is how much? 18,700. This is the first working note. Easy, I believe. Can we get to working note number 2? Okay, G. I've taken 5 ka 60%. 5 is a selling price. Selling price ka 60% is raw material cost. That's what I've done. Or directly you can multiply by 3 instead of 5 ka 60%. In case you're wondering what is this. Okay, now. Alright. Working note number 2 is for your debtor. On debtor you will follow cost sheet format to extent possible. First you will start with what? Raw material consumed. How many units you produced? 60,000. What is raw material cost per unit? 3 rupees. So 60,000 into 3, how much? 1,80,000. Done, Aji. Now, only this or you have labor cost also? How many units? 60,000 units. What is the labor cost per unit? 0.5. 60,000 into 0.5. 30,000. Overhead cost. Anywhere they told overhead includes depreciation? No. If they had said overhead cost includes depreciation, what we would have done? Excluded. Here nothing mentioned. How many units did you produce? 60,000. What is overhead cost per unit? 1 rupee. So 60,000 into 1. Adding all this, what are you going to get? Factory cost. Yes, sir. To this, what do you do? Opening stock of WIP, you add. Closing stock of WIP, you minus. 1 minute. Before you take up opening stock and closing stock, you need to do a checkpoint in this problem. In every working capital estimate problem, check whether it is a new project or a new company. Check whether it's a new project or a new company. Because if it is a new project or a new company, will you have opening stock or no opening stock? No opening stock. Because if you're starting a project newly, you can never have opening stock of a raw material, no opening stock of WIP, no opening stock of finished goods. Only an existing company or an existing project can have a opening stock. Here, anywhere they told this company is new company now. New project is a new project. Any reference or no reference? I mean, this is which company? Existing company. Yes. Now, closing stock of WIP, you already got it. How much is closing stock of WIP? 18,750. Okay. Now, in these sort of problems, people, whatever is, if it's existing company, whatever is closing stock, same thing we'll assume it as opening stock. Assume that the production happens every month same. Okay. There is no change in the production pattern. Hence, if closing stock is 18,750 means opening stock also will be 18,750. But if it is new project, or a new company, will you write 18,750 or 0? So watch out for that. Okay. All right. So factory cost plus opening stock of WIP, closing stock of WIP, same number. Add it, you will get what? Cost of production. Add admin expense, given or not given? So 0. To this you add what? Opening stock of finished goods, reduce closing stock of finished goods. Now 1 minute, hang on people. Give your calculator, check the screen. What is your cost of production? 2,70,000. You will incur this 2,70,000 to produce raw material, work in progress of finished goods. Cost of production means this is the 2,70,000 is a cost incurred to produce finished goods. Correct? Now people, there are 2 ways they can structure the question. One, you are doing proportion. Remember, you are dividing by 12 and multiplying. One is the time basis of proportioning. Another one is unit basis. Some problem they will give the data in time, some they will give it in units. Like they will say, here people, how many unit, what is the cost of production? 2,70,000. Okay, it's going a little big. 1 minute. It's not reducing only, no? We'll change. Okay, fine. Now it's better. Or karab. Now also or collab. Figuring a software only is taking more time. Okay, 2,70,000. 2,70,000. Now, this is to produce how many units? 1 unit or 60,000 units? 60,000 units. Okay. Now, they will say closing stock of finished goods is 5,000 units. Closing stock of finished goods is 5,000. So, 2,70,000 is a cost to produce how many units? 60. How much for 5,000? Is this 5,000 given to you, or I am just telling? This is one way of structuring the problem. This we call it as unit proportioning. Okay, now people. Now, everybody got it? 2,70,000. Once again, I'll repeat. 2,70,000 is a cost to produce how many units? 60,000 units. Do we have 60,000 units of finished goods as closing stock, or 5,000 I have assumed? 5,000 I have assumed. Like this, you will proportion it and get the closing stock of finished goods. Okay, Ji. But in this problem, have they given this 5,000 data? Have they given units data or time data? Check. Either they will give units data or they will give you time data. In this problem, check. Finished goods, how have they given? Finished goods, they have given in units or time? Finished goods, they have given in time. That means you have to now do the proportionate in this problem in time. They may also give you units in your problem. So I explained that. Okay. And now you tell me now, same way, time proportionate you do. Can I do this in this problem? Is this applicable or not applicable? Now you tell me, how do you get closing stock of finished goods? 2,70,000. 2,70,000. Can't reduce this, huh? Ball pen ma work it. Okay. You are able to anyway get, no, 2,70,000. 2,70,000 is a cost to produce for 1 day or whole year? Whole year means how many months? 12 months. Are you holding 12 months ka stock as closing stock of finished goods, or only 3 months? So multiplied by 3. How much is that? 67,500. That's all we have done over here. Clear, sir? See, you check over here. 2,70,000 is for 12 months. How much for 3 months? This is time-based proportionate. Another way is unit-based proportionate. Check how have they given and accordingly apply in the problem. So this is your closing stock of finished goods. It's a new company or existing company. For existing company, if closing stock is 67,500, opening stock also will be same. So add this, you will get the COGS. How much? Same number, 2,70,000. Add selling expense not given in the problem. So you will get annual cash cost of sale. Done, sir. Next, in the problem, they will say 80% of sales is on credit basis. 70% is on credit basis. Like that, they will mention. In this problem, any mention or no mention? That means total sale is on a credit basis is the assumption. So in this problem, annual cash cost of sale and annual cash cost of credit sale different or same. Some problem they will give you data to find credit sale, use it. In this way, not there. Done. Now we will use this to get what? Debtor. How? This 2,70,000 is a value for 1 day or whole year. So 2,70,000 is for 12 months. Do you give 12 months credit to our debtor, or how much credit we give to debtor? We give only 3 months. So same thing. 2,70,000, where it went? Here. 2,70,000 is for 12 months. For 3 months, how much? That's your debtor. Need a minute to process this or comfortable? Should you solve in this format only, or your choice? Your choice. Just that all our question problems we have solved. Almost we have solved 10 to 12 questions on working capital management. Everything in this format only we have solved. So hence continue. Move on to the next. Now what is third working note? We need a creditor. For creditor, we need a raw material consumed or raw material purchased. We need annual raw material purchased. But we have annual raw material consumed. From consumed, how do we get purchased? Take annual raw material consumed. Add closing stock of raw material. Reduce opening stock of raw material. Fine, now people. Now, raw material ka value given na, not given na? Not given. Again, you have to check. The data can be given in units or it can be given in time. If they give units, we will proportionate in units. Otherwise, we will proportionate in time. How? Very simple. Check. How much raw material did you consume? 1,80,000. This is for 1 day or annual? Whole year you have consumed 1,80,000 raw material. So this 1,80,000 is for 1 day or 12 months? 12 months. Do you hold 12 months ka raw material consumed as closing stock of raw material, or check? They told how much raw material stock you will maintain. Raw material you will maintain how much? On an average, how much? 2 months. 2 months of what? 2 months of your consumption. 2 months of your consumption, you will hold it as raw material ka stock. Okay, here they have given. So do the same thing. What is that here? $1,80,000 is for 12 months. What is your raw material storage period? 2 months. For 2 months, how much? 30,000. That wala proportionate. Since it's an existing company, if closing stock is 30, opening stock is also 30. So your raw material purchase will be same, 1,80,000. Any doubt? Any doubt or okay? Now this is annual raw material purchase. Annual raw material purchase. So this 1,80,000 is for 1 day or whole year? Whole year credit we will get from creditor or only 2 months? They mentioned in the problem. Credit given by the creditor is 2 months. 1,80,000 is on 12 months platform. For 2 months, how much? 30,000. That's your creditor ka value. I'll give you a minute. Just observe and ask me if you have any concerns. Fine now people. Practice. Oh, this all will come with practice. Right? Working capital estimates wala problem. Okay. Now, these are the 3 working notes. Then the final statement. Take all this data and dump it into the final statement format. Now we have closing stock of 3 things. What are those? Closing stock of raw material we know. How much is closing stock of raw material? Closing stock of raw material 30. Closing stock of finished goods 67,500. Closing stock of WIP 18,750. Take all this and put it in the format. Current assets. Then do you know debtor? Yeah, working note number 2, debtor is 67,500. Any prepaid expense in this problem or no data? We have only outstanding expense, no prepaid. Cash they only gave in the question. How much? 20,000. Adding all this, you'll get total current assets. Now current liability. What and all is there in current liability? Tell me. Creditor, outstanding wages, outstanding overheads. Creditor, we got it here. How much is creditor? 30,000. Push this here. Outstanding wages. People, wages and overhead is outstanding for how many months they said? Wages, overheads are paid first of each month for the previous month. This month ka wages you pay next month. So it is outstanding for how many months? 1 month. What is outstanding? Wages as well as overhead. Okay, come back to your cost sheet. What is your total labor? 30,000. This 30,000 is for 1 day or whole year? So 30,000 is for 12 months. 12 months wages is outstanding or 1 month? So for 1 month, how much? 2,500. So that is your outstanding wages. Similarly, overheads. What is the overheads for the whole year? 60,000. 60,000 is a data for how many months? 12 months. 12 months is outstanding or only 1 month? How much is that? 5,000. That is your outstanding overheads. Adding this, you will get the total current liability. This is your total current asset. This is your total current liability. This minus this will give you excess of current assets over current liability. To this, we add safety margin. But in this problem, there or not there? Not there. So, I mean, that only is your net working capital. Okay, Sarji. And now I don't have time, so I'll explain safety margin using this problem only. Okay. Usually, I'll tell you 2 ways in which they can ask safety margin wala problem. I'll just take you through here only. We have questions on this in our regular class, but now I don't have time to go through each question because we have at least 12 questions on this. I can't take you through all the thing. As much as possible, let's try to explain here only. One way they will say safety margin is, sir, either they will say safety margin or they will say maintain provision for contingency. Something like that they will say. First, one way of structuring is they will say maintain it at 10%. How much? Safety margin 10%. That's all they will give. If they say that, take your calculator. How much is current assets total? 203,750. How much is your current liability total? 37,500. These two you minus. How much is it? 166,250. Correct? Huh? So 166,250. Or maybe I have built a different example. Let's maybe take this only. Now people, excluding safety margin, your working capital is how much? 20 lakh. How do you get this? From current assets, if you reduce current liability, you got here you told 166,650. No, that only is excluding safety margin. How much have I assumed it to be? 20 lakh. They will say in the problem, maintain safety margin how much? 10%. People remember the heading. What is the heading of this? Estimation. It's not pakka number. It's a estimate. Your estimates will be pakka or it can go wrong. It can go wrong. So hence they are saying as a safety purpose, whatever working capital you have arrived, maintain a little extra. Maintain a little extra as what? Safety margin. Okay, that percentage, how much have I assumed here? 10%. Suppose you got current asset minus current liability, how much? 20 lakh. How much safety margin we have to maintain? 10%. To whatever number you have got, multiply 10% to that. How much is that? 20 lakh ka 10%. How much? 2 lakh. That means your net working capital will be 22 lakh. Simply you need to add a safety margin. This is easy. This is how they will give in majority of the questions. Whatever number you have got, to that you add safety margin. Safety margin will always be 10% or question will mention. It can be 5, 10, 15, whatever. I have just for simplicity purpose taken it as 10%. This is the most common way of asking safety margin adjustment. There is one more. There is one more way. What? Pay attention to these words. Exactly call out this for me. Once again, read this for me. This 20 lakh is working capital excluding safety margin. Now when you add safety margin, now you will get what? Working capital including safety margin. The key word there is excluding and including. Okay, Naji. Now another way of asking safety margin is they will say same thing. Maintain safety margin at 10%, but including safety margin they will say. Maintain working safety margin of how much? 10%. On what basis? Including basis. Now, normally we multiply safety margin of 10% on an including number or an excluding number. This 20 lakh is excluding safety margin. Take this and multiply 10%, correct? But in this question, what have they told? In my example, what they say? Don't calculate safety margin on the excluding number, calculate on the including number. That means now we have to calculate safety margin on this. But do you know this? No, adding these two only you will get this. Now that means this particular number is not known. So how will you calculate safety margin? This they used to ask in your foundation. Remember, profit after charging commission you used to calculate. You used to do rate divided by 100 plus rate in accounts. CA foundation. Similar wala adjustment over here. Okay, na? Everybody good? So what is the funda over here? We can't calculate safety margin on the 20 lakh. We have to calculate safety margin on the including number, which in my example is what? 22 lakh. Now how to calculate? Because we don't know this number. For that, multiple ways to do it. I've explained the logic of that in regular class. Now I'll tell you one formula. Much easier. Logic I'll have to spend 5 minutes. Formula 2 minutes. We'll take the time essence wala. Now if they give you, what scenario again people? Watch out. What is the word? You look for including. If they say that, let's say working capital excluding margin is still same number. How much is that? 20 lakh. But should you calculate safety margin on the excluding number or including number? Including number. Including number is available or not available? Not available. So how to calculate safety margin is very simple. Take working capital excluding safety margin. How much is that? 20 lakh. There we used to do rate divided by 100 plus rate. Rate divided by 100 plus rate. Here ulta. Rate divided by 100 minus rate. Rate divided by 100 minus rate. What is the rate of safety margin? 10%. So take this 20 lakh into rate. Rate is 10%. Divided by 100 minus rate. 100 minus 10% is how much? 90. That way you'll get the answer. Fine, now people. I'd explain the logic of this later. Now I'll not go into that. Follow this. This is rare, okay? You don't get this in too many questions. In 1 or 2 RTPs, MTPs, they've asked this particular adjustment. Otherwise, mostly it's going to be this adjustment that's going to come. Fine, now you'll do this method when? Only when they say calculate safety margin on an including basis. If you see the word including, then only you will do this. Otherwise, normal way. Done na, sir. Now tell me what is this once again. Just call it out for me. How do you calculate safety margin? Here in this case, take excluding wala number. Take excluding wala number into rate divided by 100 minus rate. Okay. Yes, sir, people. Why we don't, if you want to know why we don't add this, in CA Foundation we used to add, right? Because that was an expense. If you remember, we used to calculate managers' commissions and all on that basis. That was an expense. Expense we used to finally reduce from profit. Expense finally we used to reduce from profit. Safety margin we are reducing from number or finally adding. Hence, it has an opposite effect. Okay, there is another logic also. Let's not go into that now. This is enough for the time being. Because if you do this, you'll get marks. That's enough. Okay. That's your safety margin. One more drama. Done. Okay. Now, can I take you through one more question on the working capital estimate just to get our understanding a little better? Can we try to solve a little faster? Okay. Show you the number, wait. Find in the question only stuff over here. Question number 23. Again, study material question. You remember I said one way of asking is based on time. Another way of asking is based on units. So we learn about the units bala proportionating in this particular problem. Too much cold, super. You're not able to hear, Okay. Question number 23. Anija Limited. Study material question again. Is a newly formed company. Newly formed company means no opening stock of WIP, no opening stock of raw material, no opening stock of finished goods. Okay. First time they're asking working capital, blah blah. Okay. Sir, 1,04,000 completed units. Completed units means finished goods. 4,000 units of WIP. Awesome. Normally WIP we get it as a proportionate. But here we have to worry, or they've only given units. So take the units and multiply by the respective cost per unit. You'll directly get what here? WIP. Should we have to do proportionate or not required? In the previous problem, walk me through once again. How did you find WIP? Previous problem. First, raw material related WIP, how did you find? Annual raw material consumed divided by 12 into work in progress holding period multiplied by DOC. Why? Because number of work in progress units was given or missing. Hence we use that wala proportionate. Here we have to use proportion or WIP units given. WIP units given how much? 4,000. And what is raw material cost per unit? 80. Simply if you multiply, you will get the raw material related to WIP. Yes, no. Here we don't have to do proportionate, directly multiplication. Comfortable? Okay. Now check. Raw material cost how much per unit? 80. Wages 30. Overheads is how much? 60. Including depre or excluding? Anyway, we solve the problem on a cash cost basis. So depreciation should be included or excluded only. We want excluded wala number and they have given excluded. So any more adjustment to be done or nothing? Take this only. Total cost they have given, selling price given. Okay. Raw material in stock, how much? 4 weeks consumption. So last problem data was given in months. Here it is given in weeks. So we'll have to do the proportionate in weeks. In a year, how many weeks are there? 52. Work in progress, assume 50% completion stage in respect of conversion cost. That any which way we will do the same. Raw material will assume 100%. Conversion cost we going to assume 50%. Here any which way told. A material issued at the start of the processing. So full material if you issued at the start of the processing, DOC of raw material is 100%. Finished goods they have not given in time. They have given in units. Remember we discussed. So that means here we'll do time proportioning or units proportioning. Units. Credit given by supplier. Creditor gives 4 weeks credit. To debtors we give 8 weeks. Lag in payment of wages. Lag means paying on early basis or delay basis. So there's nothing but what? How many? 1.5 weeks. Okay. Cash to be maintained how much? 25,000. Anything else given? No. Safety margin also not given. I think already know. Assume that how many weeks are there in a year they say? 52 weeks. Okay. And all the sales they're asking us to assume is on a credit basis. That any which way we're going to assume the same. Okay. Walk me through the process, people. First working note. WIP. Proportion or straightforward? They have already given WIP units how much? 4,000. So how much is raw material relating to WIP? WIP ka units is 4,000. What is the raw material cost we saw? 80. Was it 80? Raw material cost is 80. So 4,000 into 80 you do. How much is that? 3,20,000. Next. And DOC is anyway 100%. So this is same. And what about labor cost? 4,000 units. So what is the labor cost per unit, people? Wages is 30 and overhead cost is 60. Okay, 4,000 units of WIP, labor cost is 30 per unit. So don't multiply and leave it at that. Because if you just leave it at that, that means activity is complete, right? Work in progress means it is fully complete or not fully complete? Not fully complete. Hence always don't forget to multiply DOC. For conversion cost, if they don't give, we'll take DOC to be 50%. Multiply how much? 60,000. Same thing for your overhead cost. What is overhead cost per unit? 60. How much is WIP units? 4,000. 4,000 into 60 multiplied by DOC percentage, which is 50. 1,20,000. So you got your closing stock of WIP 5 lakh. I hope little better now. Working on number 2. Walk me through. First, raw material consume. Here once again people, they give finished goods data separately, WIP data separately. To produce finished goods also you will incur raw material. For WIP also you need raw material. Right now you need to buy, right? So hence what you have to do? In the previous problem it was combined. So we took. Here they have given combined or they have separated. How much of finished goods did you produce? They told 1,04,000. How much is WIP? 4,000. That means for 1,04,000 finished goods, how much material you need? For 1 unit, 80 rupees. For 1,04,000 units, how much? That is 1. Okay. This is for finished goods. Only for finished goods you need raw material or also WIP. So add WIP ka raw material we have already calculated. How much is that? 3,20,000. Take from the previous working note only. Add 3,20,000. That gives you total raw material consumed. Easy. Okay, Naji. Same way, your labor cost also. How many finished goods units? 1,04,000. For 1 unit, what is the finished goods? 30 rupees. So add. What about WIP related labor cost? How much is that? 60,000. Add it. Totally, you will get annual labor cost. Same way, overheads. How many units? 1,04,000. What is the overhead cost per unit? 60. Multiply, you will get the finished goods relating to overheads. What is WIP related to overheads? 1,20,000. Add it, you will get the value. Clear, Aji? Adding all this, you will get what? Factory cost. To this, add opening stock of WIP. It's a new company, they only told. For a new company, opening stock is 0. Minus closing stock of WIP, you already got. How much is that? 5 lakh. So by doing plus minus, you will get cost of production. Admin expense not given. Opening stock of finished goods not there. Reduce closing stock of finished goods. Here be careful. Closing stock of finished goods, you use time proportion or units proportion? Time or units? Time or units? So check how have they given finished goods. They give finished goods ka stock in time or units. You calculate for me now. 8,000 units. Your cost of production is, you calculate, let's check the value. 1,76,80,000 is the cost of production. Obviously, you incur cost of production to produce finished goods. How much of finished goods? 1,04,000 units. So calculate. What is the number you're getting? 13 lakh. How did you calculate? 1,76,80,000 is the cost to produce 1,04,000 units. You have 1,04,000 units or 8,000 units? For 8,000 units, how much? 13,60,000. Easy. This is units wala proportion. One of the two adjustments will be given to you in exam. Okay, adding all this, you will get COGS. Selling expense not there. So same thing will become annual cash cost of sale. Have they told in the problem credit sale is 90% blah blah? No. That means cost of sale and annual cash cost of credit sale, same. Are you using this? Find debtors for me. How do you do? This is a number and debtors data they give in units or time. Debtors, creditor, usually they'll give it in time. But the time is in months or weeks. How much credit we give it to debtors? 8 weeks. 8 weeks. Okay, use this data and calculate for me. Let's see. 1,63,20,000 is for a whole year. That is for 52 weeks. How much for? 8 weeks. 25,10,769. Same number. That's your debtors ka value. Need a minute or okay? Working note number 3. What is it? Creditors. For creditors, we need annual raw material purchase. But they have given annual raw material consumed. From consumed, how do you go to purchase data? Take the consumed data, add closing stock of raw material, reduce opening stock. Opening stock is 0 because new company. How about closing stock of raw material? Have they given it in units or time? How have they given the data for raw material? Raw material they gave on a 4 weeks consumption. 4 weeks consumption. They have not given it in units. They have given it in time. So do the time proportionate. 4 weeks. So how much is your annual raw material consumed? 86,40,000. This 86,40,000 is for the whole year, as in 52 weeks. For 4 weeks, how much? 6,64,615. New company, so opening stock 0. Doing this plus minus, you will get annual raw material purchased. Find out creditor for me using this. What is creditor ka period? Creditor ka we give how many weeks? 4 weeks. So calculate that for me, people. Annual raw material purchased is 93,04,615. This data is for 52 weeks. For 4 weeks, how much? This number divided by 52 into 4 will give you 7,15,740. I hope better. Take all this data and dump it into your working capital estimate wala problem. So all the closing stock of 3 things you put it. Debtors you update. Prepaid expense not there. Cash is already given. Creditors also we have, but don't forget the outstanding expense. Do we have anything outstanding here? Yeah, there is a lag in payment of wages. How many weeks? 1.5 weeks. Now people, we need total wages. So for that again, don't calculate. Our cost sheet will have that. What is the total labor cost? 31,80,000. 31,80,000 is the cost for 1 day or whole year? Whole year. Whole year is 52 weeks. How many weeks wages is lagging or outstanding? 1.5. So 31,80,000 is for 52 weeks. For 1.5 weeks, how much? 91,731. Safety margin, any drama? No drama. No drama. That's the answer. Better. So one type of question we are done. Can we move on to the next? Okay. This chapter alone, I will do the concept and immediately we'll do the question also backing that, because there are too many, we might forget it. And some of them are better learned with numbers. So, on this till here, I think we are there, we're done. Okay, moving on to the next two. Treasury management, all these are theory, people, not that important, leave that. Now, one thing if I'll have to say is cash management model. 1 or 2 marks this may be asked either as a theory or as a small numerical. Quickly, I'll run you through that. Now we are moving on to cash management. First set of problem is estimation of working capital. Now we are moving on to managing cash. So now, one question arise was, how much cash should the company maintain? How much cash should the company maintain? 1 lakh, 10,000, 40,000, how much? That Bomol sir, William Bomol sir is trying to say how much cash or what is the ideal level of cash a company should maintain. You remember economic order quantity wala formula in costing? Square root of 2 AOC, 2 AO divided by C. Here UPS. Here what? UPS. Same, square root 2 times of UP divided by S. Same, economic order quantity means what? How much inventory order we should place so that the ordering cost and the storage cost is minimum. Correct? That's what economic order quantity is trying to calculate. Here also same thing. Bomol sir used that economic order quantity ka formula. Instead of AOC, sir substituted with UPS. Okay. What sir is trying to say is, people, each time, see, when a company has a surplus cash, they will invest. When you invest, there will be a cost. Because when you invest, you will have to go through a broker. Broker may charge some brokerage. So each time you invest, there is a cost. If you don't invest, you lose out on the return. If you want to invest, you have to incur a cost like brokerage. If you don't invest, you will lose out on the return. So Beaumont sir is trying to say how much cash you should maintain so that your transaction cost, your brokerage cost and your opportunity cost of losing out the return, both are minimum. Same economic order quantity wala formula. Instead of AOC, it is what, people? UPS. Data will be given. U for annual disbursement. Annual disbursement of cash, they will give you the value. P for transaction cost, like brokerage, 30 rupees per transaction, 50 rupees per transaction, they will give you. S is your investment return, or they will say opportunity cost of return is 8%, 10%, etc., etc. Take the number, plug it into the formula, you will get the particular number. Same EOQ ka formula. Instead of that, UPS. 1 marker question, if at all it comes. Most of the times it doesn't come, just covering. Okay, now people. This is about Bomol sir ka model. Bomol sir in a way is suggesting how much cash should the company maintain. Now there is same another sir, Miller or ORR model, Miller or model. What Miller or model is sir saying is Baumol model is faltu. Baumol model is faltu because an organization cannot have a minimum level of cash. Or let me rephrase that. Every organization cannot have same level of cash. Like ArivuPro and Tata. If Tata is maintaining 1 crore cash in hand, Gandhi note, can we also maintain 1 crore Gandhi note? That much cash we don't have, no. Yeah, no, yes. So do you think ArivuPro and Tata are comparable or not comparable at all? That means how can every organization maintain same level of cash balance? So that is not possible. Hence, Miller or model suggested something else. He did not suggest a number. He suggested a limit. Miller or model is not suggesting how much cash to be maintained. Miller or is giving a limit. Sir defined 3 limits. Upper limit, lower limit, return point. Upper limit, lower limit, return point. Water ka chemical symbol, chemical formula H2O, HZO. Here, H2O alla. And 2 and Z almost look similar only, no? Instead of H2O, it is, well, remember it as what? HZO. H is, upper limit is denoted by the symbol H. Lower limit denoted by the symbol O. Return point denoted by the symbol Z. Okay. Now what is this? Look at this. William R. model defined the limits. Upper limit, lower limit, return point. Upper limit denoted by H. Lower limited by O or 0 also they can say. Okay. Return point is Z. Okay. Now what Miller or model is trying to say is, let's say a particular organization, again, upper limit, lower limit, organization only should find every organization should find their own upper limit, their own lower limit. Let's say a particular organization ka upper limit is 50,000. Upper limit means maximum cash a company should hold. Maximum cash a company should hold. Lower limit means minimum cash a company should hold. Now what William Miller sir is saying is, the moment cash reaches upper limit and the return point is average number, let's say 30,000. Okay. What Miller sir is trying to say is, the moment cash reaches 50,000, that means we are holding too much cash. We are holding too much cash. When you are holding too much cash, invest. When you are holding too much cash, invest. How much money you will invest? Invest in such a way that you get back to return point. You get back to return point. From 50,000, your cash balance should become 30,000. How much you will invest? 20,000 you will invest. You will do the investment when the cash reaches upper limit. Now, when the cash balance reaches lower limit means you are holding high cash or very less cash. The moment cash reaches lower limit, which is 10,000, you already purchased the investment. Now sell the investment in such a way that cash balance again comes back to return point. How much investment you will sell? 20,000. Like this. So you keep playing around this number. So as long as you are within this range, you are fine. And this range, is there any magic number or organization should find for themselves? Each organization should find their own limit and within the limits play around. Accordingly, you decide when to invest, when to sell the investment. That is a Miller R model ka funda. Theory may come, 1 or 2 points you may have to ask. I have only told over here, upper limit, lower limit is there, no? 1 point, that only. When cash reaches upper limit, purchase the investment to get the cash back to return point. When the cash reaches lower limit, sell the investment to make the cash balance reach back to return point. Ho gaya 3 points, enough. 2 marks they'll ask you at best. 2-3 points if you remember, more than enough. Okay now people, again not that very popular also. This is okay. Yes sir. No. Investment is not sufficient means? We'll take a loan. I'll talk about in budgeting. In that one problem I'll take it. Float means delay. Again this is okay, leave. The word float in FM means delay. Okay. So we have done one question on float. I think here I would not like to take you through that for the time being. Next, what we can do, 1 minute. Give me 1 minute, go 1 minute, 1 minute. Or maybe we'll do off cash cycle. Hang on, one question was there on cash cycle. We'll do off that. On this one, question number 11. Question number 11, it's a study material question again. If you don't have the question, no problem. Simple question. Go look at the screen. Following information is available with respect to Sai Sir Trading Company. On an average, debtors are collected after 45 days. Inventories holding period is 75 days. Creditor payment period is 30 days. Sir, if you are a trader, you'll have raw material and work in progress. Huh? No, you'll only have finished goods. Okay. Firm spends 120 lakh annually at a constant rate. It can earn 10% on investment. Whatever investment they make, they earn a return of 10%. From the above information, you are required to calculate cash cycle and cash turnover. Sir, cash cycle, operating cycle, one and the same. Tell me what is the operating cycle ka formula? R plus W plus F plus D minus C. Same for cash cycle. Is R there? No. Take a calculator. R is 0. It's a trading company. So raw material work in progress is 0. What about finished goods ka? Here inventory refers to finished goods. What is finished goods ka storage period? 75 days. Plus debtor ka credit period. 45 days. Minus creditor ka payment period. 30 days. How much is your cash cycle? 90 days. That's your first requirement. Easy. So if your cash cycle is 90 days, what is the meaning? Your funds are getting blocked for 90 days. That's the first requirement. Then they asked what? In the same requirement, they also asked cash turnover. Cash turnover means how many cycles can you run in a year? How many cycles can you run in a year? Some problems may they will ask us to assume 360 days. Check, have they told? Assume how many days in a year? 360. If they don't mention anything, we'll take 365. Here specifically they ask us to told 360 days. Now people check. To run the cycle once, how many days we need? 90 days. And in a year, how many days are there? 360 days. So this particular cycle, how many times you can run in 1 year? To run one cycle, 90 days. And there are 360 days in a year. So 4 cycle. Tell me the formula for that then. You took 360 divided by 90. So formula will be number of days in a year divided by cash cycle. So basically 360 divided by 90, your cash turnover is 4 times. Clear up people? Okay. Next, what have they asked to? A minimum amount of cash to be maintained as they become due. 1 minute people. How much is the company spending annually, they told? What is your annual operating cost? 120 lakh. This is for 1 day or annually? Annually. 120 lakh you are spending on an annual basis. Okay. Now, in a year, how many cycles can you run? In a year, you can run 4 cycles. And how much are you spending annually? 120 lakh. This 120 lakh is annual number. This 4 is also annual number. That means, can I say 120 lakh is the money required for 4 cycles? For 1 cycle, how much money? For 1 cycle, how much money on an average you need? 30 lakh. Tell me what is that as a formula? 120 lakh is annual operating cost divided by number of operating cycles in a year. That only we are calling it as cash turnover here. So the formula will be annual operating cost divided by cash turnover. So you are spending 120 lakhs in a year to run 4 cycles. For 1 cycle, to run 1 cycle, on an average, how much balance we need to maintain? 30 lakh rupees cash balance you need to maintain to complete one particular cycle. Problem, got it? Got it. Next, same they've asked now. 1 minute, where is it saying? Savings, they're asking you to calculate savings by reducing inventory holding period by 30 days. What is your inventory holding period? 75. Is it 75 anymore or it is reducing? Watch out people, sometimes they use the word to. Sometimes they use the word by. It is reduced to 30 days means 30 days only is inventory period. Here it is 2 na by. It is reduced by 30 days. So from 75, it will reduce by 30 means what is the new period? 45 days. Now you have to calculate. Again, calculate the cash cycle for me. Inventory holding period now is 75 minus 30. How much? 45. Debtor is still 45 minus creditor 30. How much is that? Now your cash cycle will be 60. Calculate cash turnover for me. To run 1 cycle, we need 60 days. To run 1 cycle, we need 60 days. How many days are there in a year? 360 days. So how many times can you run the cycle? 6 times. That's your cash turnover. Okay, Naji. Next, how much minimum cash we have to maintain now? Annually, how much are you spending? 120 lakh. 120 lakh is for one cycle or six cycle? 6 cycle. For one cycle, how much? 120 lakh divided by 6, how much? 20 lakh. Sir, earlier, how much minimum cash balance you used to maintain? 30 lakh. Now you are maintaining? That means your cash balance is same or it is getting reduced? That is a savings. That is a savings. We can stop the answer there, but if they had not given one more data, I would have simply said savings is 10 lakh. But they told in the problem, sir, when you have extra money, when we have extra cash, now here, earlier we used to have how much minimum cash we had to maintain? 30 lakh. Now are we maintaining 30 or 20 lakh? That means how much cash we don't need anymore? 10 lakh. That means can I say this is surplus cash? If somebody has surplus cash, they'll keep it idle or invest. Do you know investment ka return? Yeah, they told investment ka return is how much? 10%. That is your savings amount. So how much cash is available for investment now? Earlier you used to have 30, now cash needed is only 20. So how much cash has got released? 10 lakh. That you can invest and get how much return? 10%. So how much is your savings? 1 lakh. If this 10% was not given in the problem, I would have said savings itself is 10 lakh. Because they gave 10% return, we are calculating the return amount and calling it as a savings. That's all is this problem. Clear, people? This is about cash management. So basically, we have to manage each components of current assets. Inventory management, you learn only in costing. It is not there in FM. Cash management, we covered. Oh, I think there is one more. Budget. We'll do of that also. Any problem? No. Okay. Now, I'll just go back to the chart once. So, where it is there? Here. Now, people, another type of question which can come for anywhere between 6 to 10 marks is the cash budget. It's come, it can come. Budget, in fact, is very easy, but it is very lengthy. Probably the lengthiest of all the type of question we have here. Very easy. It will take a lot of time, but more importantly, what will happen is when you're solving budget problem, lot of silly mistakes will happen. Because there will not be one column. There will be like 6-7 columns. Hurry burry mein, instead of updating in column number 2, we'll put the value in column number 3. These sort of small mistakes happens a lot in budget problems. So watch out for that and watch out for the time. Okay, budget will be on the little lengthier side. Conceptually very easy. Now, budgeting means what, people? Budget in general means what? Estimating the data which has already happened or the data which is about to happen. Something which is about to happen, we are predicting. Like election polls. Correct. Okay. Now, budgeting means we are predicting the future. We are predicting the future. There are few ways to prepare the budget too. One is receipts and payment method. One is the receipts and payments method. In this method, all the receipts we have to estimate, all the payments we need to estimate. That is one. Another way of budgeting problem is adjusted income method. Adjusted income method means from profit, we'll try to get the cash. From profit, we'll try to derive the cash balance. That's what we used to do it in AS3 cash flow statement, if you remember. Indirect method. From profit, we used to derive operating cash flow, if you remember. This is that method, adjusted income method. This is not there in your syllabus, only theory is there. I'm just saying. Okay. Last one is balance sheet method. Sir, in balance sheet, you will have assets, liabilities. Now, what balance sheet method says is, you find out all components of balance sheet. You find all components of balance sheet like equity, share capital, retained earnings, long-term debt to current liability, fixed asset, current asset also, except cash. Get cash as a balancing figure. Get cash as a balancing figure. All the other components of balance sheet you calculate and get what as a balancing figure? Cash. That is your adjusted balance sheet method. These two we will not apply in our problem. In exam, what they will test is the receipts and payments method. Okay. How this works, let's take up through one question and probably understand that better. Where is it? Question number 25, Zeta, again a study material question. This is a good question to know the concepts. So I picked up this. You're finding, okay, fine. All of you are voting places here only, or you're supposed to travel today? You're supposed to travel overnight journey, or after class? After class, how far you say, macha? 2 hours. 2 hours is manageable. On election day and all, you have some travel problems, huh? Buses and all are restricted, is it? Anything of that sort? No? I'm asking because can I reach Bangalore? I can reach, no? No, just kidding. Anyway, I booked my tickets. I'm just asking. Yeah. All right. All of you are voting, right? All of you are eligible to vote, right? First. Anybody not eligible to vote? All of you are eligible to vote. Whom you are voting, you don't have to tell. I don't want to know that. I'm just asking. What? That's good. But I've heard that here, like, I think some few of them were telling. I think even Dilip sir in Bangalore was telling. Some of the audience in Tamil Nadu are attending classes there. They were saying, finish the class early, 1 or 2 days early. We want to go to our hometown. Is it a normal practice that 1 or 2 days before election only you guys want to go to your hometown and do some campaign or something? Is it? Yeah. And like, normally, what do we do is on the election day, we will check. Early morning, we'll go and vote and come off. Where the crowd is the very less so. Otherwise, after 10 o'clock, the crowd will become, I think these days it's manageable. They have a lot of booths, and I think overall, I think it should not take more than 10 minutes, 15 minutes. But still, people are lazy to wait for that also. We'll be like, go, tuck, pee, come out. Yeah, we want that wala feeler. Yeah, so, but is it a normal practice? Just was curious. You're like 1 or 2 days before only you would like to prepare yourself for election? Huh? They will get some. He's saying they will get some benefits. Now I can't tell all that on camera. Ignore that, people. Okay, he said that, I ignored it. You also ignore it, not me. Yeah. Okay. And that is a different thing. So I think we should not speak about that at all. That I think pretty much happens everywhere. Okay. All right. Fair enough. So that means tomorrow holiday for you, indirectly. But Papa, you have to prepare also, no? I think your now mind is not running on the election side. Your mind is more about CA. What is the final date of what is the last date this time? 15th. So it starts on 5th and it ends on 15th. So that is the day you are eagerly waiting for. On the 15th day, literally books. Freedom, right? That all I feel, right? Yeah, I can understand. Even we used to have the same feeling. Finally, that I think ours used to be afternoon exam. Now also I think it's same afternoon. 5 o'clock sharp. Jai Allah Jesus Shiva. The paper goes well, no? Amazing feeling. Yeah, throw everything. One day, I think next 2-3 days do nothing. Only we'll not get that much sleep, but still we'll be like, we'll roll on the bed only like a potato. Because so many days we would have compromised on our sleep, no? Yeah, so I think all that we want to compensate in the next 2-3 days. But thuko varadilla. Yeah, we will say that's all. Sleep will be still 7-8 hours only. Beyond that, difficult. Unless you people are Kumbhakarna, so where you can sleep for whole day. Okay. No, what the?
After exam, thinking about result.
After exam, you're saying, I'll think about result. Don't think much. Enjoy it. Go for All India Darshan now. Yeah. Just hop on one train and go for All India Darshan. Best. That's what they say. In fact, many people say that. If you want to really get confidence in life, right? In India, no, you don't have to do much. Many people say this. Just go and do a train travel. Or public mode of transport while travel. Not fancy. Not flights. Right? Not your too much of AC 2-tier and AC 1-tier travels. A normal travel when you do, you'll meet different sets of people. You'll get to know a lot of stories. And that inspires. Because most of us have that, we will think our problems only is great. We are going through so much. What do you know? We are studying 14 hours a day. Somebody is working for 20 hours a day. Manual labor. Okay. So then we'll think, oh, I am okay. Manageable, right? So they say at least 6 months. Many people have suggested this. 4 to 6 months if you travel in India, all across India, length and breadth, north, south, east, west, right? No particular course can teach you that much knowledge as the 6 months travel teaches, it seems. I've not experienced. I've not done continuous travels. Of course, I've traveled in bits and pieces, like 20, 25 days, 30, 35 days of that sort, but not done it in one shot. But if given a chance, especially, I would say, I think it's worth. I'm not pushing you, just saying, okay, it's your call what you want to do. But definitely it's a big confidence booster, because you need to be comfortable with a meeting with the people, interacting with the people, and putting across your points. Most of us are chartered accountants. No, we are good. We are amazing here. Super knowledge, right? But not so good. Expression does not mean English. We don't have to be Shashi Tharoors of our country. Full beda, right? Just that confidence of putting across your thoughts. That should be there. Most of us hesitate. We have that stage fear. We feel like what people will think, what they will judge. Strangers and all we will worry. We would have not met them only. Yo, what will he think? First of all, who's he? Do you know him? Her? No, then why are you bothered? That person is not putting sore on your plate, no. Sapad, is he putting? No, right? So that means you should worry about your things. So confidence is important in people, in life in general. Land a degree. Degree is secondary. Yes, we are in this particular journey. We want to complete it. Definitely so. But degree without confidence will not get you far. So just blindly don't be restricted yourself to the four walls of the classroom. That was a mistake which I did initially, right? I was too good in studies. I'll not deny, not even boasting. I was always the first ranker, second ranker types throughout, right? But what I lacked immensely was that self-belief or self-confidence in interacting with people. If 10 people look at the sky and say it is pink color, I used to say, pink only. It is not blue. That much scared I was, right? Yeah, it was. Trust me. Right? I have gone through so much, like, in fact, so much of stage fear I had that the moment I used to look at people, I'd be like, this, right? But then, yes, I went through a few embarrassing moments. So, yes, I had my share of a lot of embarrassments in life, but that's how you learn. You'll have to put yourself, go out of that comfort zone, put yourself out of that comfort zone, and then only you'll learn. And now, if I am sitting here and addressing here, the reason is because I took that chance. The reason because of that shivering. Because that day I shivered, now I'm able to face you with confidence. So you'll have to put you through. Don't be afraid of trying new things in life. And don't be afraid of people mocking you. If someone is laughing at you, don't look at it like people are laughing at you. Look at it like people are laughing because of you. I mean, you are an artist. You're making them laugh. Such a nice job, no? So change your perception. Don't be worried about what someone thinks. Doesn't matter who it is. Many times our relatives only will be will pull us down. Right? Yeah. Because jealousy is something which is a big part of human life. Because from our schooling days, we've been taught you have to be 1 mark ahead of that person. He's your good friend only, but I still need to be 1 mark ahead. So our constant thing is I want to be little ahead of somebody. So when you're constantly thinking on those directions, right, we'll become too much competitive and jealousy might creep in. But focus on things that you can do. Not worry too much about what somebody else is doing. Because that's a bad feeling to have. Thinking about what somebody does, right? Because it's a constant pressure. See, now also, like I'm telling you even now, like I've qualified almost like 15 years back. Still, if I have to really compare, there are so many teachers like who work for like 12 hours a day. Who do non-stop marathon for 12 hours a day. Now, if I think he is doing 12 hours a day marathon, I also should do. Then my throat will give up. And then that will probably be my last marathon, which I don't want. I'll only do what I can. Like in our own academy, many teachers like your Akhilesh sir, or Karthik sir, or Dilip sir, they all take morning evening batch. But my body doesn't support morning evening. I've tried 8-9 hours, but I used to work in the initial 4-5 years. Now I feel very tired. Right? Maybe old, daddy did. Yeah. So it doesn't support. Now I feel like I don't want to do. That's not me. If they want to take more than happy, let them do. That's their journey. This is my journey. So we can't, because if you compare, comparison is always there in every field and everything. So just focus on what you can do. Now, right now, you have to study. Just focus on your studies. How many times your revision your friend has done and all, you ask after the exam. It's fine. Now, purely what needs to be done. Correct, no, macha? Yeah, they all met their friends and came. Now this guy started putting blade. We'll go and come now. Yeah, no, over much. Blade, not too much time. Already 9. Okay, we'll come back. Apologies for that. Recorded people, don't worry. Yeah? Now, question number 25. End of the day, try out new things in life. Go out of your comfort zone. Whether it is your studies, life in general, if you want to try out something, a business idea, a travel, could be whatever. Could be as simple as, right, changing your sleep timing, could be changing your eating timings, whatever. If you're not a morning person, if you're a person who wakes up at 9 o'clock in every day, try waking up maybe 7 o'clock one day. Small habits can build a big momentum in your life. So focus on that, and every opportunity when you get to address someone, take up that opportunity. Initially, it will be like this, but that is required for you to achieve. If you want to earn big money, big fame, speaking is a good skill, people. Holding audience attention is the biggest currency in today's environment, because we are Instagram zamana. Beyond 10 seconds, people don't have patience beyond 1 or 2 minutes these days, right? So if you can hold someone's attention for 1 hour, 2 hours, 3 hours, 4 hours, it's a good profession to be in. So work on that. It will take some time. So just don't be focused only on the degree. That's not going to get you. It's going to get you a job. If you're a rank holder, definitely you're going to get an amazing opening job. But will you survive in this field? Depends on your upskilling portion, your networking, your communication skill, your confidence. More importantly, self-belief. Start practicing that. Don't ever talk negative to yourself. Can I do it? I am already 4 attempts over. I am an average student. Doesn't matter. Now it's a restart. This is a fresh start. So always look at it like that. Everyone can do it. If a dumb guy like me can crack CA, you Umma people, you are brilliant, folks. You will do it like this. Aram se you will do it. Okay, now have that confidence, have that belief. Nobody should. It's not required for anyone else to believe. We should believe in ourselves. That is enough. That we will tackle the whole world. You remember that Rajinikanth 1 rupee coin? No, 1 rupee sir built 1,000 crore empire. Yes, no. Like that, we will build the same. Shivaji movie, correct? Okay, but end of the day, have that self-belief. That's all I would say. Now come back. I think enough for now. Maybe after some time we will take up the extra blades. Question number 25. This is the question number 25 in our class notes, a study material question. Following information relates to Zeta Limited. By the way, people, which question are we solving? Which question is it related to? Cash budget. So one company, it's a publishing company, Zeta. They've given data. Selling prices 15 per book. Sales are made on credit and invoice on the last day of the month. Fair enough. Variable cost of production per book is material cost. So we are a publishing company. We will publish the book or produce the book and then sell it. To produce the book, how much material cost will incur? 5. Labor cost is 4 per book. Overhead cost is 2. So add all this and deduct 15. Probably you'll get your profit. Okay. Sales manager has forecasted the following volume. Sale manager will estimate production volume or sales volume. Obviously, sales manager will give you sales units. So this is the number of books sold or expected to be sold from November till August. They've given. Fair enough. So if you take the number of books and multiply by the selling price per book, you will get the sale value. Okay, G. Customers are expected to pay. They already told, no, we make the sale on a cash basis or credit basis. Credit basis. Now, customers are expected to pay 1 month after sale. How much? 40%. 2 months after sale, 60%. So, customers are paying in 1 installment or 2 installment. People, we are preparing cash budget on a receipt and payment basis. Receipt and payment, Andra? Each receipt we have to forecast. Each payment we have to forecast. Now, collections from debtor is a payment or receipt? Receipt. So, one working note, we'll put it up for this now. Now, when they give you big budget data will be quite lengthy, okay? So, first read the requirement. For what is your budget period? You need to prepare budget for what to what? Prepare a cash budget for 6 months from January to June. Jan to June. So, but they have given Jan to June data or November to August. But we need only from Jan to June. Fine. But if you make a sale in November, will you get the money in November only or 2 months after sale? 2 months after sale. Correct? So hence, you need to, just because they've given Jan to June as a budget period, should we take only budget period or before that also? Because November month if you sell means 2 months later in January also you will collect some money. Or if you don't want all that drama, one simple way is they've started from what? November. Our working note also will start from November. So that way we don't have to worry about period only. So first copy this. From November to maybe since budget period stops when? June. We can stop from November to June. We can copy the data. Here, check if that's what I've done. November to, in fact, I've copied till August also. Maybe if you want, you can stop at June in exam MC. Okay, sir. Now, you tell me, I need units sold or I need sale value. How do you get sale value, people? Take the number of units sold and multiply by the selling price per unit. One or two we'll quickly do. 1000 into 15, how much? This 1000 into 15 is also 15. So November, December, January, the sale value is 15,000. That is what I've got this. Easy. This is the sales made. In November, how much sales have you made? 15,000. If you sell the goods means, will we get the money immediately or 2 installments? 1 month after sale, we will collect 40%. 2 months after sale, we will collect 60%. That's what the question says. So November, if you sell means 40% of the money you will collect it in next month, which is what? December. 15,000 ka 40%, how much? 6,000. And November, 15,000 if you sell means 2 months later you will collect 60%. Calculate 60% of 15, 9,000. That is this number. Clear? These are the 2 collections for this number. Same way, December, if you sell 15 means January, you will collect 40% of that. How much is that? 16,000. Next month, you will collect 9,000. March, if you sell 22,500, how much you will collect in April? 40%. Calculate. 22,500 ka 40%. How much? 9,000. Balance 60% you will collect it in March. So on and so forth. That's how I'm just showing you the pattern. Balance you can figure it out. No? Now if you add it, you will get the total month ka collection. Now I have not total November, December and July and August. Why? We can find the value. Still not written. Why? Because our budget period is only Jan to June. Only budget period ka total I have done. This is payment or receipt. Receipt. One data. Clear, sir? Like this, we need to figure out each receipt and each payment. Very easy, but it will take a lot of time because so much of data to fill it in. Now check this about sales. Now we are purchasing the book and selling, or we are producing? Producing. Now check. Company produces the books 2 months before they are sold. 2 months before they are sold. Now, March, if you want to sell 1,500 books means you will produce in March month or 2 months before? 2 months before. That means January only you will produce 1,500 books. Correct? Huh? Similarly, January, if you want to sell 1,000 books means you have to produce this 1,000 books 2 months before only, which is what? November. That's the order. Correct? Huh? Alright. Now people have started from November. They have given the data from what? November. So now we will, or maybe I'll read this one more line. Creditor for material are paid 2 months after production. So we will produce the books 2 months before sale. But to produce the books, we need to buy raw material. So to our creditor, are we paying in that month only or 2 months later? 2 months later. So first let's get the few things right. Now, January, if you want to sell 1,000 books, how much this 1,000 books you should produce when? By November. That means I will start copying the data from here to here. Do you agree? Give me the table ka breakup. Table ka heading is what? Payment to creditors. Payment to creditors. I will start. Month will start from November. November mein how many books I will produce? 1,000. That means I will start copying the data here. From here. Yes, sir. So that's what I've done here. Check. 1,000, 1,250 I've copied. Till June I've copied. Beyond June I don't need. I've stopped it there. Once more. Pakka. Pakka. Okay. Now this is your units produced for that particular month. Now, excuse me. For to produce the books, how much will your material? Each book will cost how much? What is the material cost? 5 rupees. This is the books produced. This is the books produced. Now, and to produce 1 unit of book, how much material cost will be incurred? 5 rupees. So that means for 1 unit, 5 rupees means for 1,000 units, how much? 1,000 into 5, which is 5,000. So basically, take this and multiply by 5. You will get the total material cost needed to produce the books. Agreed? Yes, sir. This amount will be paid to the creditor immediately or 2 months later. This November month ka material amount or purchase amount, we will settle it now or 2 months later? January. That was what? Jan. This 5,000 you will settle in January. This December ka material cost of 6250, we will settle 2 months later, which is February. Like that, you will get the amount. This is receipt of payment. Payment to whom? Creditors for supplying the materials. Good, Sarji? And that's it. Is there or 2 more is there? labor and overheads. Can we read the labor and overhead part? So, and now what is the labor cost per book? For one book, how much is the labor cost you'll incur? 4 rupees. Sir, labor cost also you'll incur when you produce. Labor cost also you'll incur when you produce. Each month ka books produce data missing or already found? Already found. You already wrote here, no? Every month from November to December, November to June, how many books you will produce? This same data you will copy for your variable overheads and your labor overhead also, because both will come when you produce the books. Correct, Aji? Pakka na ji? Since I've written variable overheads here, first maybe I'll read that data. Check. What is the variable overhead per book, sir? 2 rupees. But hang on, read the information. Variable overheads are paid in the month following production. That means variable overhead expense you may incur in November. November month if you incur variable overheads, that month only you will settle, or next month? Because they said following production. So next month you will settle. And they are expected to increase by 25% in April. That means from November to March, variable overhead cost will be, per book will be 2 rupees. From April onwards, will it be 2 rupees or it will increase by 25%? So 2 plus 25%, how much? 2.5. From which months onwards? From April to August, the book cost will not be, overhead cost will not be 2 rupees, it will be 2.5 rupees. Question telling. Correct, sir? So let's get this done. How much books are you producing every month? Is that data missing or already got? For creditors only, we have derived that. So copy that. This is number of books produced. We want overhead cost. What is the overhead cost per book? Up till March, how much is it? Or up till March or up till April? What did they say? It will increase by 25% in April, they said. So from April it will increase. That means up to March it was 2 rupees. Okay. So this is the number of books produced. No? And what is the variable overhead per book? 2 rupees. So take the number of books and multiply 2. Up till which month? March. But from April onwards, you will multiply 2 rupees or 2.5 rupees. So for November, the cost will be 1000 into 2, which is how much? 2000. 1 or 2 I will show. Okay, no? For February, how many books have you produced? 2000. What is the cost per book? 2 rupees. 2000 into 2, how much is that? 4000. But from April onwards, will you take 2200 and multiply by 2 or 2.5? 2.5. So 2200 into 2.5, how much? 5500. Like this. Correct. This is the cost. This is the cost. Are we settling this overhead cost in that month only or following production? Following production means next month. So November month ka variable overhead, we will settle it in December. But is our budget period December or January? Hence only I have taken the data from Jan to June. If you want, you can write this also. December mein how much we will settle? November ka 2000 you will settle it in December. But not required for budget. Hence I have kept it as dash. December ka variable overhead you will settle it 1 month later, that is Jan. February ka you will settle it in March. April ka you will settle it in May. Like this you will get how much payment you will make from January to June. This is for what payment? Variable overheads. One working. That's it, or one more? One more. What is that? Labor cost. Labor cost also will come only when you produce the books. And how much books you are producing every month? Missing a same data. Here what you have copied. For creditor, variable overhead and labor cost. Number of books produced data is same. Now let's go ahead and check the labor overheads ka data. What did they say? How much is the normal labor cost they have given up? The initial May 4. Now they have given some adjustment. Check. 75% of the wages are paid in the month of production only. Following production in the month of production. That month only you will pay how much? 75%. Balance 25% when you will pay? In the balance 25% you will pay following month. So that means here wages are settled in 1 installment or 2 installment. That month only 75%. Next month 25%. And what is your labor cost? 4. Will it be same? No. Check here what they said. A wage increase of 12.5% will happen from 1st March. So from 1st March onwards, will it be 4 rupees or 4 plus 12.5%? How much is this? 4.5. From which month onwards? March month onwards. Clear, sir? Done. Now, how many, same drama. How many books did you produce in November? 1000. Per one book, how much is the labor cost? Up till February, labor cost is 4 rupees. From March onwards, it will become 4.5. So for 1 unit, 4 rupees. For 1000 books, how much? 1000 into 4, which is 4000. Similarly, January, 1500 books you produce. For one book, how much is the labor cost? 4 rupees. For 1500, 6000. Like this, you will do it up till February. From March onwards, will you multiply 4 or 4.5? So 1900 into 4.5, 8550. That you will go on multiplying for the remaining. Done now. This is what? Payment or labor cost? Labor cost. But we are preparing cash budget, means we don't want labor cost. We want labor cost paid. Right? How is the payment terms? 75% you will pay that month only. 25% you will pay next month. Okay, now check. Labor cost in November is 4000, means how much you will pay in November? Oh, that month ka 75%. 4000 ka 75% how much? 3000. 4000 ka 25% you will pay next month. Similarly, December it is 5000, means that month only how much? 75%. 5000 ka 75% is 3750. Next month 1250. Like this, you'll have to do the payment pattern. Should I have to take you through everything or okay? Adding these two, you will get the total payment. Total payment I have only captured from Jan to June because our budget period is Jan to June. Like this. So by the time you do this, all this you'll have to do it within 20 minutes. That's the crux. Very easy but lengthy. Because it will be 10 marks, maximum 25 minutes, not beyond that. So you'll have to be having good writing speed over here. And done. Now all these are working notes. Next, what they ask? Cash budget. From what to what? January to June. Budget ka same format we used to do in our regular class. Very simple. You start with opening balance, add all the receipts, deduct all the payment, and then you'll get the closing balance. As simple as that. All the receipts in one place, all the payments in one place. Okay. Opening balance. Check. They must have given. We are preparing budget from what day? 1st January to 30th June. They have given already cash balance. Check. On 31st December 20x3, cash balance was how much? 1500. We are preparing budget from 1st January 20x4. So 31st December 20x3 ka closing balance will become 1st January ka opening balance. How much is opening balance given? 1500. Start with that. Okay, sir. Add the receipts. Here only one receipt was there, which was what? Receipt from data. Sometimes cash sale also may be there. By the way, we read the whole data, na? Or anything was missing? Nothing, right? Okay, so few more are there. Maybe this part I'll read that later. Maybe leave. Now first we'll capture whatever we have so far worked out. Opening balance 1500. Add all the receipt. What receipt have you identified? Collections from data. It is there over here. Plug this number here. Collections from data. Clear, sir? Done. Then what have you identified? 3 payments. What are the 3 payments? Creditor payment, overhead payment, labor payment. All the 3 payments which you got from working note number 2, 3, 4 updated here. In budget, mein inflow we show it as a positive number, outflow we show it as a negative number. Done, sir? Now read some other extra data they've given over here. Company is going through some restructuring and they will sell one property in May for how much value? 25,000. So when they sell means it becomes a payment or a receipt? Receipt every month or May? So May month mein 25,000 receipt captured. Okay, that's it or few more. Then they told it is also planning to buy a new printing press in May for 10,000. When you buy, it's a receipt or a payment? Payment. Depreciation they have given. They can give depreciation 101 lines. I will not even read. Why? Non-cash. I'm preparing cash budget. Depreciation relevant for me or absolutely irrelevant? Irrelevant. They can say depreciation is this, so it became that story they can give. Not even bother. That is irrelevant for me. But printing press you purchased in May for how much? 10,000. Receipt or payment? Payment to which month? May month mein purchase of printing press so 10,000 ka outflow. Anything else? And there is also some tax payment of 10,000 when? March. So tax mein one more March month mein tax payment of 10,000 is there. Okay, people. From opening balance, add all the receipts and deduct. Take this one of you do this for me. There's one more extra point they can bring in the budget. It's not there over here. I will use this question and explain that. Take your calculator. Add all the receipt for me. How much is the receipt? Total receipt is how much? No, matlab only receipt. Only 15,000 here. And this month only 15,000. Okay. Now, similarly, add all the payments for me. Only for 1 month you add. Total payment. Only for the first month. From here to here you add and tell me how much. 30? 13 or 30? 1325. Pakka na? Alright, let this be on hold. So how you normally do the cash budget wala problem is opening balance, add all the receipts, deduct all the payments. Fine, automatically you'll get what? Closing balance. Closing balance here is 3250. Easy. January ka closing balance will become February ka opening balance. Again the same thing. Take opening balance, add all the receipts, deduct all the payments, you'll get closing. And accordingly go on filling it up. Fine. This is a normal way. Problem ends here. Clear? In some problems, this is over. This problem is over. Another adjustment they can ask in budget. I don't want to do to one more problem for that. Here only I'll explain. One more way they can ask budget is, they will say company should maintain a minimum balance. Let's say, here I've just solved it for you. Company should maintain a minimum balance of 2000. They will say company should maintain a minimum cash balance of 2000. Now check everybody here. Same. How much is opening balance? Take a calculator. Opening balance how much? 1500. How much is your receipt card total? 15,000. Add. How much is your payment card total? 13,250 minus. That's what I've done here. Opening balance 1500, receipt is 15,000, payment is 13,250. How much are you getting? 3250. 3250. That is the cash available. But company wants to maintain 3250 or only 2000? Only 2000. We have 3250, but we need to maintain only 2000. So we have surplus. How much extra we have? 1250 we have extra. 3250 minus required closing balance of 2000. If you do, you will get a surplus of 1250. If you have surplus money, then you will invest. You will invest. This is not asked in this problem. It may come. If they ask us to maintain minimum closing balance, then one more extra component will come as investment. Here investment sold or investment purchased. Since we have extra money, we will buy the investment. How much value? 1250. When you buy the investment, cash balance same or cash balance will reduce? It will reduce by how much? 1250 and closing cash balance will become 2000. Agreed. Everybody. January ka closing will become February ka opening. Now same drama. February ka also give me total of receipt. Only one receipt is there, which is what? 15,000. So I've added. Opening balance 2000. Receipt to 15,000. Yes, sir, people. Add all the payments for me. February month ka add all the payments from here to here. Add 6250, 3000 and 7500. If you add, how much are you getting? 16,750. Opening balance January ka closing balance will become February ka opening. Receipt for February is 15. Payment is how much? 16,750. Do this plus minus. What are you getting? You're getting 250 rupees. Ayyo. We only how much? 250. But minimum cash balance to be maintained 2000. Yes, we have 250, but closing balance should be 2000. Now we have surplus or shortage? How much shortage? 1750. Last month there was surplus, no? What did you do? You purchased investment. How much investment? Now sell that. Because we have shortage now. No? When you have shortage, sell. When you sell investment, how much investment we have? 1250. When you sell investment, it becomes a payment or a receipt. Add 1250. Still is there, still shortage is there. Still how much shortage? Still shortage is there means borrow the money. Both they will not test. Ideally how they will, this just it has come like this. So both they will not test. How either they will say is, 1 month may it will be surplus. Next month may it will be shortage. When you have surplus, you will buy the investment. When you have shortage, you will sell the investment. Both will not come. Borrowing, investment, both generally they don't ask. Investment purchased, investment sold. Each one they will go on alternating. Correct? Sir, first month only if you have shortage means, then you will take the borrowing. That is another kind of. First month only if you have shortage means you will borrow the money. Next month if you get a surplus, you will not invest. You will repay the borrowing. That's hence I have brought in everything over here. Either they will ask you these two scenario in exam, or they will ask you borrowings taken, borrowings repaid. Both will not come. If it comes also, what would I have shown? Okay, there's another adjustment which can be asked in the budget. Normally, if the problem is way too big, this adjustment, ICA will remove it. But if they give you simple adjustment of budget, then this adjustment also can be inserted in the budget question. It depends. But I hope you're comfortable with this. Okay, so I think with this cash management fully we are done. Here, no. So if this minimum cash balance they say means, in the receipt column, if you want, you can keep the receipt payment as it is. End May you can write investment. You can have two extra column: investment purchased and investment sold. Or investment sold you can show under receipt column. Investment purchased you can show under payment column. Presentation is your column, your choice. Two extra components will come: investment purchased, investment sold. Or borrowings taken, borrowings repaid. Show them as a separate two categories at the end, or show them under respective receipts and payment. That is also okay. It will definitely come. This value what we are showing will come into your budget. ICMA we have such questions. We have done. Okay, you can refer to that. Okay. Cash over. How much more is pending? Cash over, debtor, creditor pending is there. Okay, now I think we'll do off first maybe credit debtor. Debtor is the biggest one. People, one more hour still is there. You don't do ussu pussu one. This one. In debtors, there could be two types of question. 1 minute. In debtors, two types of question may come. One is, let's say company is giving a credit of 30 days. Company is giving how many days credit? 30 days. Now they are planning to increase this to maybe let's say 70 days. From 30 they want to make it to 70 days. So they will give you the data. As a finance manager, you need to suggest whether this new credit policy should be implemented or should the company continue with existing 30 days ka credit policy. That is the evaluation of credit policy wala problem. Okay. Again, in this also we have solved at least 7 to 8 question minimum on this only. 1 or 2 questions here I will take you through. We'll not have time for everything. Okay, sir. For this also, if you remember, I had a format. Anybody remembers the format? All 7-8 questions here also we solved in same format. Anybody remembers? Okay, first I'll run you through the format. Sales. Then here no plus minus. I prefer the numerical presentation. First sales, then variable cost. No? Then fixed cost. No? Point number 4, total cost excluding bad debts. That you will get by adding these two. 2 plus 3 will give you total cost excluding bad debt. Then 3 things: bad debts, collection expenditure, discount. Bad debts usually will be there in all these problems. These two will come in some problem. It will not come in some, but it's a format, so I'm discussing everything. So from your sales, so if you reduce all the expenses, now you will get profit before tax. Reduce tax, you will get profit after tax. Last May, you will take opportunity cost, and finally you will get the net benefit. If this our building only, yeah? Huh? Oh, somebody is pulling the chair, or a mixer. Drilling is going on, Oh, okay. Oh, fine, fair enough. A net benefit. So finally, by comparing these two, you'll get net benefit. If this net benefit is positive, you can implement the credit policy. Otherwise, no. I know you would have not got the format if you're looking at the first time. Let's do a thing. Let's run through this format with the help of a small question itself. But same format will hold good for almost every question of evaluation of credit policy. 1 or 2 questions. 1 minute. Quickly, I'll show you. Maybe we'll start with this. Question number 12. Again, I have taken study material question only. Just keep your calculator. Nothing much to do over here. Easy question only. A trader whose current sales are in the region of 6 lakh per annum and average collection period how much? 30 days. Wants to pursue a more liberal policy to improve the sales. A study made by management consultant reveals the following information. Now people, they are thinking currently our credit collection period is how many days? That's our existing policy. Now some consultant has given how many options? 1 or 4 options? 4 options. That they are calling it as A, B, C, D. In A option, you'll increase the collection period by 10 days. Instead of giving 30 days credit, now you will give 10, you'll increase by 30 days means credit period will become 40 days. In credit policy B, you'll increase the collection period by 10 days. From 30, it will increase by 20 means it will become 50. Now don't calculate 40 plus 20. No. Right? From the existing policy, compare the increase period. Getting what I said? Don't take 40 and add 20 and make this a 60. On the current policy, we are giving 30 days credit. Now, if you go for policy B, it will increase by 50. From the current policy, it will increase by 20. From 30, it will increase by 20 and it will become 50. Like that. Similarly, tell me what is the collection period for policy C? From 30, it will increase by 30. And so, it will become 60. And here, 30 plus 45. This is the new collection period for the 4 different policies. Okay. If you implement this policy, they are saying sales will increase. Currently, what is sales have they given? Not given. No. Fine. They would have given some information. You can figure it out. Or here only we can see. In fact, given over here. How much is the sales? 6 lakh. Current policy ka sale is 6 lakh. If you go for policy A, sales will be 6 lakh ka increase. It will increase. It will become how much? 6. It will increase by 30 means it will become 6 lakh. 30,000. Here from 6 lakh it will increase by 48. So it will become 648. 6 lakh plus 75. 675. 6 lakh plus 90. 6 lakh 90,000. This will be the new sales under the new policies. Default. Default means bad debts. They have given bad debts. Currently we don't know the bad debts. Maybe they'll tell later. And all the 4 policy these are bad debts percentage. Percentage is on sales. 1.5% of 630 if you do, you will get the bad debts amount. Fine. Now check. Selling price per unit is how much? 3. That means number of units sold, do you know now? 6 lakh is the total sale. So each unit is sold at 3 rupees means how many units are you selling? Number of units sold is 6 lakh divided by 3 which is 2 lakh units. Any problem? No. Average cost per unit is how much? 2.25. In that variable cost is 2 rupees. Sir, total cost is 2.25. And in that if variable cost is 2 rupees means what is fixed cost? The balance 2.25 minus 2 which is 0.25 per unit. And how many units? That means what is your fixed cost? For 1 unit 0.25, for 2 lakh units 50,000. Fixed cost indirectly given. Clear, Sarji? And fixed cost will change as per the policy or it will remain same? Currently, if our fixed cost is 50 means under all the 4 new policy also it will remain same 50,000. Okay. Now, current bad debt loss is 1% and 4 new policy ka bad debt loss given. Additional investment ka return is 20%. We'll come to that in a minute. How many days you have to assume in a year? 360. Now, which policy we have to recommend? So that means we totally have now 1 existing policy plus 4 new policy. Now you tell me which policy would you like to go for? The one which gives the lowest benefit or highest benefit? That means you need to work out the benefit for 5 policies. What are those? Existing ka benefit, existing ka net benefit and 4 new policy ka net benefit. And select the one which gives the highest net benefit. Okay, that only the format I put it up. Once again, we'll run through. First, we will take what, sir? Sales. Sales, do you know for all the 5? Yeah, 6 lakh and this number. Check the solution. 6 lakh current policy and then the increase amount. Should I have to explain this once again or sorted? Sorted. Then variable cost. What is variable cost? Variable cost they have given per unit. How much is that? 2 rupees. How to calculate variable cost? We can do it in simple way. Sir, maybe first one I'll show. What is the total sales? 6 lakh. What is the selling price per unit? 3. If you do this, what are you going to get? 2 lakh. That is the number of units. What is the variable cost per unit? 2 rupees. Correct now. That means variable cost, we can express it as a formula. Can you tell me what is that? Sales divided by 3 into 2. Sales divided by 3 into 2. Sales divided by 3 if you do, you will get the number of units. If you multiply by 2, because variable cost is 2 rupees per unit, now you will get the total variable cost. That means simple formula. If you want to write, what you can write over here? Sales divided by 3 into 2. Correct? Huh? It's not mandatory to write, just showing it to you. So 6 lakh divided by 3 into 2, you do 1 or 2 quickly, we'll calculate. 6 lakh is a sale. Selling price per unit is 3 rupees. Variable cost per unit is 2 rupees. So 6 lakh divided by 3 into 2 is 4 lakh. Correct, Ajay? Understanding now? Calculate for B policy now. How do you calculate? 6,48,000 is a sale. Selling price per unit is 3. By dividing this, you will get number of units. What is the variable cost per unit? 2 rupees. Multiply 4,32,000. Like that, you will get variable cost. Clear? Next, we have to take fixed cost. I think fixed cost we already calculated. How much was that? Fixed cost is 50,000. Will fixed cost change as per policy or same? So same 50,000 I've copied across. I've done a working note and shown the fixed cost over here. That is okay. You don't even know the number. Okay, done. Next. Sales over, variable cost over. Once I'll call out the format for you. If possible, try to remember the format and solve in the same. Every type of question can be, credit policy question can be solved in the same format. Sales, another one, variable cost, then fixed cost. Point number 4 is total cost excluding bad debt. To get that, we take 2 plus 3. Variable cost and fixed cost we add. So add these two, you will get the total cost excluding bad debts. I'll tell you why did I find this in a bit. Done now. Then is this the only cost? We have 3 more. 3 more we can have. Bad debts, discount, collection expenditure. I think discount data not given. Collection expense there or not there. But bad debts is not there or there. Bad debts is there. Bad debts they have given. Current policy ka bad debt is 1%. 1% of sales. 6 lakh ka 1%. 6,000. And respective policies ka they have already given bad debts percentage. 1.5, 2, 3, 4. Take the sale and multiply the respective percentage. You will get the bad debts. Any problem? Here in this particular problem, collection expenditure and one more the discount there or not there. If it is not there, no need to bring it in. 0 components, no need to bring it in exam. Now people, I want you to find profit before tax. How do you find profit before tax? From income, reduce all the expenses. Sales is your income. Then you have to reduce all the expenses. But once again, hang on. Fixed cost and variable cost, I think I've already added. And now, in order to get profit before tax, I'll take column number 1 ka value, reduce column number 4 minus column number 5. That's what I've written here. Because these two I've already added and got total cost excluding bad debts. If you want, you can also write 1 minus 2 minus 3 minus 5. That is also okay. So calculate one first policy ka calculate profit before tax for me. 6 lakh minus 450 minus 6,000. 1 lakh 44,000. Any problem? Now reduce tax rate. In this problem we read, is there any tax rate or no tax rate? So tax is 0. Profit before tax also, or rather PAT is also same. Now last data we have to consider is opportunity cost. Opportunity cost. What is this? People check the screen, everyone. Under current policy, how many days credit am I giving to my debtor? 30 days. Sir, if I give 30 days credit to my debtor, I'm collecting the money now or after 30 days? That means for 30 days, my funds are getting blocked. For 30 days, under current policy, and for 30 days, my funds are getting blocked. Yes. If my debtor had paid me today only, if my debtor had paid me immediately, I could have utilized this money and invested for how many days? 30 days and got some return. Now I'm getting that return or I'm losing that return. Opportunity cost. Opportunity cost is always considered for decision making. There is no journal entry for opportunity cost because it is notional. In accounts, we don't pass any journal entry for notional. But in financial management, we always consider the opportunity cost. Once more, I got it. Pakka? Just to be on the safer side, once more, what does it tell me? Current policy, how many days credit? If you're giving 30 days credit, means we are collecting the money after 30 days. It means my funds are getting blocked for 30 days. If my debtor had paid today, if my debtor had paid me the money today, I could have used that money and invested for how many days? 30 days and earned a return to the extent of 20% here given. Required return on additional investment, how much? 20%. I would have got this much return. Now I'm getting this or I have lost it. Hence, opportunity cost. Correct. Now, opportunity cost, you tell me, should I calculate it on sale value or cost value? My funds are getting blocked to the extent of sale value or cost extent. That is the reason in between this table, I had one column called total cost excluding bad debts. This number is on which you will calculate opportunity cost. So this number is helpful for us to calculate opportunity cost. That is where this column comes into picture. Otherwise, this column we would have cut off. Once more, I got it. Now calculate opportunity cost for me. How much cost is getting blocked for me in current policy? 4,50,000. For how many days? 30 days. So 4,50,000 into 30 divided by 360. They ask us to assume 360. Into how much return have you lost? 20%. Into 20%. How much is that? 7,500. So tell me opportunity cost ka formula if you want here. Total cost excluding bad debts. In fact, you can say cost of credit sale, but that is nothing but your total cost excluding bad debts into collection period divided by 360 into rate divided by 100. If you do that, you will get your opportunity cost. Opportunity cost alone calculated for B policy for me. Let's see. B policy. Total cost excluding bad debts 4,82,000 into rate. Rate is 20 by 100. How much is the collection period in B policy? 50 days. 4,82,000 into 20 by 100 into 50 divided by 360. How much? 13,380. Correct. Now 1 minute. Hang on. So far, numbers, how to calculate opportunity cost are comfortable for everybody. So to calculate this opportunity cost only, I have this column called total cost excluding bad debts. Otherwise, this column was not necessary. Now we already learnt in investment decision, opportunity cost can be a benefit or it could be a cost. Here it's a benefit or cost, benefit or cost, benefit or cost, benefit or cost, benefit, benefit, cost. Anyone is saying both? Both, sir. Cost, cost. How? Sir, you are getting the return or you are losing the return. Since debtor is delaying the payment in current policy, since debtor is delaying the payment by 30 days, this particular return of 7,500, this particular benefit you are getting or you are losing. Losing. If you are losing a benefit, it's a benefit or cost. You probably saw I wrote positive number, so you told benefit. I told no, here I'm not using positive negative, I'm using the representation here. So just because you see positive number here, don't say benefit. No. Okay, now so you are losing a benefit. When you are losing a benefit, obviously it's a cost. Now you tell me, what is your PAT? What is your PAT here? 144. Now this opportunity cost is a benefit or a cost? I mean, these two you will add or you will minus. That's what I've written here. Net benefit is 8 minus 9. These two ka minus you do, you will get net benefit. Clear, sir? Even if you don't know anything, if you just blindly mug up the format, it will take care. You'll be able to solve the question. But it's good to know the logic just in case you're stuck. Everyone okay now? So that way you will get this much net benefit. Now you tell me what is the selection rule. You will select that policy with the lowest net benefit or highest. Which is the highest? This 140 wala number. 140 number is policy A. Okay. So decision is select policy A. One more way they will ask here is, sometimes they will say calculate incremental benefit. Calculate what? Incremental benefit and give the decision. Incremental benefit means extra benefit. How do you get extra benefit? Take the existing benefit and compare it with the benefit of the new policy. Now here check. Let's do it for this. What is existing policy ka benefit? 136,500. Policy A ka benefit? 140. Compared to existing policy, new policy A is giving how much extra benefit? These two ka minus 3606. Similarly, policy B is giving how much extra benefit? Don't compare these two. Existing policy ka benefit, you have to compare it with new policy ka benefit. These two you do minus 315. C ka this minus this, or rather 138 minus 136. These two ka minus 1583. 131 minus 136, positive or negative? Negative. So if they ask you to calculate, you do this only if the question asks, otherwise not required. If they ask you to calculate incremental benefit, you'll have to give the decision based on incremental benefit. Now you tell me, you will select the one with the lowest incremental benefit or highest. Which has the highest? Same. Policy B. That's your solution. So adopt policy A as it has the highest net benefit or highest incremental benefit. That wala problem. Opportunity cost I have calculated as a separate working note. That's all here. Comfortable? Okay. Can I take you through one more question maybe just to be on get our understanding little better? Okay. Question number 14. No, a break after finishing chapter. Another 45 minutes. Stay. Okay. After this, one last concept. Over. Now they're saying, "Appa, finally." Yeah. Company ka present credit sale how much? 12 lakh. Existing credit terms is 1 bar 10 net 45. This is again a common terminology they'll use in FM. 1 bar 10 45. What this means is, we will give a discount of 1% provided our debtor pays us within 10 days. If debtor doesn't want to give discount, doesn't want to take discount offer, he has to pay us within 45 days. So credit period given is 45 days. But in order to get the discount, they have to pay us within 10 days. How much percent discount we will give? 1. So that's what here. This 1 is your discount percentage. 10 is your to get the discount, how many days within which you need to pay, and 45 days is your credit period. Done. Okay, this is our existing thing. Go. What is our current average collection period? 30 days. Okay. Sir, why is it 30, sir? It should be 45, no? Sir, some people will go for discount offer. Some debtor will pay us within 10 days and take the discount offer. Some debtors will pay us within 45 days and say, I don't want discount. So on an average, there will be both the sets of people, no? So on an average collection period is 30 days because some will go for discount offer, some will not go for discount offer. Hence, it is not 45 days. Collection period is given to be 30 days. Yes, Saji. Average basically. And now don't do 10 plus 45 divided by 2. Because we don't know what percentage of debtor will take up discount offer, what percentage will not go. So that way, these two, if you add and divide by 2, you will not get 30. You may or you may not get 30 because that data is not given and not needed also. Leave. Current bad debts is how much? 1.5% of sales. In order to accelerate the collection process further, so as to also to increase the sale, companies contemplating, as in thinking, to liberalize the existing credit terms. Now, from 1 bar 10 net 45, they want to go to 2 bar 10 net 45. So, what does this mean? You tell. Instead of 1% discount, now we want to go for 2% discount, provided debtor pays within 10 days. Else, they have to pay us within 45 days. Perfect. If you implement this policy, they are saying it is expected that the sales will increase by 1/3 of existing. Whatever is our existing, under new policy will give us same sales or it will increase by 1/3. Increase by 1/3. And bad debts from 1.5 it will become 2. Average collection period, currently it is 30. Now it will become 20. Why it will reduce? Probably more and more people will start paying within 10 days to get the discount offer. Since more and more debtors are going for discount offer, my collection period will be lesser. I'm collecting the money faster. From 30, it will become 20 days. All this data given, any which way we don't have to worry. Contribution to sales ratio is 78%. 1 second. People, you know this. We have done it in leverage. From sales, if you reduce variable cost, you get contribution. I told you, sales, contribution, variable cost, all this will go hand in hand, interlinked. Now, contribution they are saying is 22% of sales. Therefore, can I say variable cost is 78% of sales? Because sales will be 100. From 100 minus 78 only, if you do, you will get 22, no? Correct, no? Pakka, no? So, if contribution is 22% of sale, means indirectly variable cost is 78% of sales. So, that means in this problem, you know variable cost. 100 minus 22, which is 78% of sales. Opportunity cost of how much is that return? 15%. But do keep in mind, opportunity cost should always be on an after tax basis because you're comparing PAT with opportunity cost. Format, remember? PAT is on what basis? After tax. So opportunity cost also should be after tax. So last problem we didn't tell only. Last problem tax was 0. Last problem tax was 0. So before tax, after tax does not matter because tax itself was 0. In this problem, check. Opportunity cost ka return is how much? 15%. But this 15% we need on a before tax basis or after tax? But they gave what basis? Pre-tax. That means can we take 15% as a return or we need to find? Fine. How do you get some number on an after tax basis? Take the rate and you do 1 minus tax rate. And tax rate is given here. How much? 30%. So will we take 15% as opportunity cost? Now opportunity cost ka percentage will be take the rate and you do 1 minus tax rate. What is the tax rate? 30%. 30% in full number will be 0.3. So 10.5%. So this is the rate we will take for our opportunity cost ka calculation. We didn't do this in the last problem. Why? There is no tax rate. Whenever there is tax rate, watch out. We want opportunity cost on an after tax basis, but here they've given on before tax basis. Next, 50% and 80% of the customer in terms of sales revenue are expected to avail cash discount under existing and liberalized policy. Under existing policy, how much debtors will go for discount option? 50%. Under new policy, how many of them will go for discount option? 80%. Now in this problem, people, we have bad debts also. We have discount also. Collection expenditure not there. Fine. Format, everything is same. Sales given or not given? Sales not given. Oh, first line only they give. How much is it? Okay. Tell me the format. Let's see how much of it you remember. Point number 1, sales. Then point number 2, variable cost. Point number 3, fixed cost, or sometimes they'll say running cost. Then point number 4, total cost excluding bad debts. This is for helpful to calculate opportunity cost. Point number 4. Point number 5, bad debts. Point number 6, discount. Point number 7, collection expenditure, not there. Then profit before tax. Reduce tax and you'll get profit after tax. Last mein, reduce opportunity cost and you'll get the net benefit. If they ask incremental benefit, do it, otherwise not required. Okay, now same every question. Now existing policy, here we have to do 5 times or 2 times. We have only 2, existing and new. Existing policy ka sale, how much? 12 lakh. Existing policy ka sale is 12 lakh, means new policy ka sales will be 12 lakh or 1/3 more. Calculate 12 lakh ka 1/3, 4 lakh. So new policy will give 4 lakh sales more. So it will become 16 lakh. Clear? Done. Next, variable cost. Since contribution was 22% of sales, variable cost is 78% of sales. Sales ka 78%, you'll give you that number. Okay. Fixed cost not given, 0. Leave. Not given means 0. So total cost excluding bad debts, 4 is equal to what? 2 plus 3. These two addition, same number. These two addition, same number. Then bad debts. Under current policy, what is our bad debts? 1.5%. Under new policy, 2%. 1.5% of sales, 2% of sales. 12 ka 1.5% is bad debts. 16 lakh ka 2% is your bad debts. Okay, Naji. Next, discount. Discount. Now, people, how much sales are you giving? How much sales are we making? 12 lakh. 12 lakh. Now, all of them will go for discount option under current policy or only 50% they told? 50%. On total sales, you will not give discount because all of them will not go for. How much percentage will go for? 50%. And how much discount will you give under existing policy? 1%. Calculate. 6,000. That is your discount. Okay, Naji. Similarly, calculate new policy ka discount. Total sales how much? 16 lakh. Under new policy, how much percentage of people will go for discount? 80%. In new policy, we are giving 1% discount or 2%? Calculate how much is that? 25,600. That is your discount. Clear? Now, okay. Now calculate profit before tax. How do you get profit before tax? From sales, or 1 second. If you want it in percentage or if you want it in numerical presentation, it will be sales minus total cost excluding bad debts. 1 minus 4 minus 5 minus 6. Collection expenditure not there. So do this 1 minus 4 minus 5 minus 6. The circle numbers you minus. 2,40,000. Same thing here also. 1 minus 4 minus 5 minus 6. If you do, you'll get profit before tax. 294,400. Yes. And next is your tax. Reduce tax at what rate? 30%. So then you will get profit after tax. Last mein opportunity cost. Calculate opportunity cost for me. Opportunity cost you will calculate on what? Total cost excluding bad debts. But 1 second. Will you take opportunity cost rate given 15%? 15% what they gave in the question was after tax or pre-tax? Pre-tax means before tax. We need after tax. How do you get a number on an after tax basis? Take the rate given and do 1 minus tax rate. So your opportunity cost net of tax or after tax will be 10.5%. Yes, sir. Calculate opportunity cost for first policy, people. total cost excluding bad debt 9,36,000 into 10.5% multiplied by the collection period. Because we are calculating opportunity. Don't take credit period. Don't take credit period because opportunity cost means the days for which your funds are blocked. In the existing policy, though you are giving 45 days credit, are you collecting the money within 45 days or 30 days? So your money is getting blocked for 45 days or 30 days. Hence, the formula for opportunity cost is credit period or collection period. So we have written it carefully over here. It's actually not credit period, it is collection period. In majority of the problem, credit period, collection period will be same. Here it is same or different. So first priority always for the collection period because opportunity cost means how many days your funds are getting blocked. Current policy mein, what is your collection period? 30 days. So calculate it for 30 days. How much? Again, 9,36,000 into 10.5% divided into 30 divided by, they asked us to assume 360, na? Anyway, they told us to take 360. Last line mein they'll tell, check 360 days in a year. So calculate how much? 8190. Same thing you calculate for new policy. 12,48,000 total cost excluding bad debt into rate by 100 into collection period and new policy 30 na 20 na. We read the problem. They told 20 days here. New policy ka collection period. Credit period may be 45 but a new policy collection period is only 20 days. So calculate it for 20 days. 7280. Basically 12,48,000 into 10.5% for 20 days is 7280. From PAT you will add opportunity cost or you will minus and you will get the net benefit. Existing policy net benefit 159, new ka 198. So reject new policy or implement. Or incremental benefit if they ask. These two you compare. How much extra benefit? Compare it to existing policy. New policy is giving an extra benefit of these two minus 38,990. So therefore decision is accept new proposal. Fine now people. Everyone understood? Now one question is, sir, why don't we include bad debts and discount also for opportunity cost calculation? Why are you taking only this number? One no. Blatantly I'll tell, format you follow. It will take care of. If you want to know the logic of it, bad debts will come after you sell. Bad debts to collection expenditure and all will come after you sell. We are calculating opportunity cost means for how many days my funds are getting blocked. Funds will get blocked to the extent of cost. Bad debts will come only after you sell. That means have I invested any money for bad debts? No. Hence, we don't include bad debts to discount to collection expenditure for our opportunity cost calculation. Hence, better to have one insertion column here to calculate opportunity cost. Hence, opportunity cost always on this number if you want to know the logic. Otherwise, format is good enough. Move on, people. Okay. I think this is sufficient for collection. This is enough for 1 minute. One more is there. You want to do one more means 10:30. If you're okay, I'll take a one more question collection policy. Otherwise, we'll skip. It's okay. 10:30 we can hold up means I'll do. Otherwise, no. Your call. Factoring will do much. Matlab, after this, I'm saying this problem will take another extra 10 minutes. Factoring, we are doing one question. One is enough. It'll sum up the whole concept. Enough. I have one good question there. We'll sum up. Totally in class, maybe we must have done 4 to 5 questions, but here one is good enough. Now check. Maybe 30th will do. This is one slightly different question. Same, but one small adjustment is there which we need to pay attention. Question number 30. Again, study material question. Slow payers are regular customers of Good Dealers Limited. We are good dealers. We have a debtor called slow payers. And that slow payers have approached the sellers to extend the credit facility. They want more time. Our debtor is saying, give us more time. We will buy more goods from you. On analysis of past performance, basis on the information supplied, following pattern of payment schedule emerges. So, what is that payment pattern? No? At the end of 30 days, slow payers will pay 15% of the bill. 60 days they will pay 34. At the end of 90 days they will pay 30. 100 days they will pay 20%. 1% is non-recovery. Non-recovery means goinda, bad debts. 1% they will never pay. Okay. I mean, this particular company, slow payers, will pay us in one installment or 4 installments. So this is a problem for one. What is that? This creates problem for, in our format, for one component calculation, this will create problem. What is that? Opportunity cost. Because opportunity cost means you will calculate. Opportunity cost ka meaning is what? For how many days funds are getting blocked. Here funds are getting released in 1 stages or 4 stages. That means you can't calculate opportunity cost once. We have to calculate it 4 times. That's the takeaway of this question. Nothing new. Because you're not recovering the money. 15% you will recover within 13. That means 15% of the money will be blocked for 30 days. So you have to calculate opportunity cost for this. Then 34% will be blocked for 60 days. Like this, you all have to calculate 4 times opportunity cost. Rest everything ditto. Got the meaning? Now quickly, can we run through numbers? Okay. Slow payers want to enter into a firm commitment to purchase the goods for 15 lakh. So for them it is purchases. For us it is sales. So if you extend the credit to slow payers will buy us, or we will be able to sell to this particular debtor how much extra sale? 15 lakh. The price per unit is, selling price per unit is how much? 150. Profit is 5. That means what is cost? Selling price 150, profit is 5 means, can I say total cost to TC is 145 per unit? 145 per unit. Easy. Okay. It is anticipated that the good dealers taking up this contract would mean an extra recurring cost of 5,000. We wrote in the format fixed cost / recurring cost. How much recurring cost will come? 5,000. Opportunity cost is how much? 24%. Fine. Now assume 365 days in a year. You need to recommend, should we extend this credit facility to this slow payers or not? Same wala drama. But here we have multiple policy or this itself. This is one policy where we have to tell whether should we implement this or reject it. What is the decision rule? Matlab, how do you take your decision? Same format may calculate. You will get net benefit. If that net benefit is positive, net benefit negative means reject. That's all. Yes, sir, Sarji. Same format. Sales. How much is the sales? 15 lakh. Start with that. Variable cost. Here I don't know whether it's variable or fixed. They gave total cost. How much is the total cost? 145. How do you calculate? Simple. How much is the sale value? 15 lakh. What is the selling price per unit? 150. If you do 15 lakh divided by 150, what are you going to get? Number of units. What is the cost per unit? 145. Because they told profit is 5. No. From selling price, if you reduce profit, you will get the cost per unit 145. So how much is that? 14,50,000. I have assumed this to be variable because they have given it on a per unit basis. No. Right. So I have assumed it as variable cost. And you don't have fixed cost, but they gave it as a running cost here extra. How much is the running cost will incur because of this proposal? 5,000 rupees. Bring that in here as well. Running cost, recurring expense given to be 5,000. So total cost excluding bad debts will be these two addition. How much is that? 14,55,000. Any problem till here or okay? Everybody? Okay, next is what? 3 things. Bad debts, discount, collection expenditure. Bad debts irka 1% of sale. 15 lakh ka 1%. So how 1%? They gave in the table. Non-recovery means bad debts. How much? 1%. 1% of sale value. Got it. Collection expenditure. Irka. And then one more. What is that? Discount. Discount ledo. Got it. Now tell me, profit before tax. How do you calculate profit before tax? 1 minus 4 minus 5. 6 and 7 not there. 0 components. Leave. Do this. 15 lakh minus 1455 minus 15. How much is that? 30,000. Correct. Tax rate not given. So tax is 0. PAT also will be 30,000. Last mein opportunity cost, but we can't calculate once. We have to calculate it 4 times. How? Let's see. How you will calculate. Tell me. I'll show you the data if you want. Total cost excluding bad debt is how much? 14,55,000. Normally, how do we calculate opportunity cost? Total cost excluding bad debts multiplied by rate. Rate of opportunity cost available into collection period. Here we have 1 collection period or 4 collection period. 4 collection period. Hence we need to calculate it 4 times. Fine. But don't take 1455. Full amount you will collect in one go or installment is given. So you have to multiply the respective amounts. So first one, let's calculate. If you want, here only we'll calculate. What is total cost excluding bad debt? 14,55,000. Entire 14,55,000 you will collect within 30 days or only 15%. So multiply 15%. Okay, now into rate. What is opportunity cost ka rate given? Opportunity cost ka rate given here as 24% into 24 divided by 100. Okay. Now this much money is blocked for how many days? 30 days. So into 30, they are asking us to assume 365 only, no? Into 30 by 365. 4,000? 4,305 I've got. This is the number I have got. I don't know whatever you say. Correct? This number okay na? 4305. Fair enough. All right. Next, calculate the next one more. Let's see. 14,55,000 into, now you will calculate full amount is getting released now in 60 days or 34%. Into 34% into opportunity cost ka rate 24 days, 24%. Now you will take 30 days or 60 days. Into 60 by 365 people. Don't take 360. 365 they are asking us to assume. How much is that? 19,570. Okay, now like this you will have to calculate. Same other two, can I review it here only? And now in 90 days mein how much you will recover? In 90 days mein we will recover 30%. So same 14,55,000 ka 30% recovery into opportunity cost ka rate. Collection period is 90 days. I have to show once more or okay? Data or you want me to write? Okay. 14,55,000. Full you will collect or 30%? 30% into opportunity cost ka rate into collection period. How much collection period? 90 divided by 365. How much pa? 25,831. Okay, the last one. What is the last one? 14,55,000 into how much you are collecting now? 20% you are collecting into opportunity cost ka rate into collection period. How much is collection period? 100 days. How much? 19,134. So last one. No? Last one is bad debts. Will not even recover. So I still want to calculate. Fine. What is the period you will assume? Bad debt means you will never collect. So what is the period you will assume? 365 days. You will never collect. Infinite. So for this one, you will not be able to calculate the opportunity cost. Hence only 4. Total you will get the opportunity cost. Total adding all this, you will get opportunity cost to be 68,787. Bring that into the table. PAT is 30,000. PAT is 30,000. Opportunity cost is 68. Opportunity cost you will add or minus. Opportunity cost is not a benefit here. One benefit you are losing. So it is a cost. So from PAT, if you reduce opportunity cost, you are getting net annual benefit or net annual cost or net benefit positive or negative, except a reject. Over. This is your evaluation of credit policy wala problems. Okay, G. Now people, one more aspect which can come with respect to our debtors or receivable management is, or the last one is factoring. Factoring. This is one arrangement we can do. Now what is this factoring? Now people, let's visualize this scenario. We are sellers. We are A Limited. We sold the goods to debtors. Worth how much money? 50 lakh. Now let's say we have given a credit period of 90 days. A has sold goods to debtor and we have to recover how much money? 50 lakh. Credit period, I've assumed it to be 90 days assumption. Okay. Now A Limited wants money immediately because they have some fund shortage. And bank people are not ready to give the loan because we have already taken too much loan. Now A Limited, they ask the debtor, macha pay. What will debtor say? What will debtor say? Don't even talk to me for how many days? 90 days. You have given me a credit of 90 days means I will pay you only after 90 days. But A Limited is saying, Venunda. Pana Venunda. But debtor is saying, sorry, impossible from my side. Okay. Now, when this scenario is there, A Limited can do something. That only something only we're calling it as factoring. Factoring is a simple case where debtors itself, we can sell it to a entity. A Limited can sell their debtor itself to another entity. That entity we call it as what? Factor or factoring company, whatever. So here A Limited will sell that debtors to the factor. Okay. And factor will give money to A Limited. When? Immediately. How much is the debtor value? 50 lakh. Factor will not pay full 50 lakh. How much amount factor will pay based on the negotiation. Usually that amount paid will be on the lesser than 50 lakh. Let's say factor told I will make 45 lakh payment. Factor told A Limited I will only give you 45 lakh. But what is the debtor ka value? 50 lakh. But factor is ready to give only now 45. Now factor will wait for how many days? 90 days credit. And then factor will approach the debtor and recover from whom? Debtor. How much money? 50 lakh. So factor paid how much? 45 lakh. Factor recovered how much? 50 lakh. That means one hand mein factor is paying 45. Another hand mein recovering 50 lakh. That means 5 lakh extra factor has. That is factor ka commission. Done na? This is the whole process of factoring. Done na ji? Where you can sell your debtors to another entity. So this way everybody happy. Why? Sir, A wanted the money right now. Did he get a? Yeah. And factor through this process is earning some commission. And debtor is neutral. Debtor wanted to pay after 90 days. Instead of paying A Limited, debtor is now paying the factor. So it doesn't really make any difference to the debtor as such. So that way it's a win-win arrangement for everybody. Clear, people? This is the meaning of factoring. Okay. If you don't want to sell the debtors to your factor, you can also make factor your collection agent. A Limited, instead of selling the debtors to the factor, A Limited can tell the factor, A Limited can make the factor gunda. You know, bank people have gundas, recovery agents. No, A Limited can make the factor recovery agents. Like A can tell the factor, go on my behalf and collect the money. From whom? Debtors. Because debtors don't pay that easily. But when hatta kutta gundas come, bodybuilders come, then debtor will pay. Take my money, take my building or bungalow, everything you take. Like that. My wife, okay. So this also arrangement can be possible. Instead of selling the debtor, we can make the factor our collection agents also. But usually we make the sales. Okay, people. Overall, this is a setup. Meaning is clear. Now, factoring is of two types. Factoring arrangement can be entered into two types of arrangement that we call it as with recourse, without recourse. With recourse, without recourse. Sir, English word recoursing means what? Recoursing means going back. Recoursing means going back. Now, let us say after 90 days, this debtor, he told factor, Poda, I will not pay. Debtor told the factor, I will not pay. Now, what will the factor do? Come back to A Limited and recover the money. If that is the factoring arrangement, means we call it as with recourse factoring. With recourse factoring means what? If debtor's default, factor will come back to the original seller and recover the money. If such is the factoring arrangement entered, means we call it as with recourse factoring. That means in with recourse factoring, who will bear ultimately bad debt risk? Factor or seller only? Original seller only will have the bad debt risk. In which case, with the recourse wala factoring. There is another factoring called what? Without recourse. Without recourse means if debtor does not pay the factor, can factor come back to A Limited or not permitted? Not permitted. Because that is the nature of arrangement. Such an arrangement we call it as what? Without recourse. That means now you tell me who is bearing bad debt risk? Factor. In without recourse arrangement, bad debt risk will be bear by the factor. Obviously, if here factor is taking more risk, no? So commission will be same or higher commission. Here with recourse may comparatively lower commission. Here the commission will be on the higher side. That how much and all, it's a negotiation. That's fine. That's not our headache. Done now. This is the meaning of factoring. Now, how from the examination perspective, what we need to worry about is they will give you the data and then say company should get into factoring arrangement or reject it. should the factoring proposal be accepted or should the factoring proposal be rejected? What do you think is a decision rule? So because you enter into factoring arrangement, there will be some benefit also, there will be some cost also. If benefit is greater than the cost, if benefit is greater than the cost due to factoring, then accept. Benefit is lesser than the cost, then reject. Allah, extra points. That I will tell you. If benefit of factoring, if it is greater than cost, straight away accept. If benefit is lesser than cost, straight away reject. Allah, some extra you'll have to do. What extra I will tell you in pointers. Clear? That is the scope of factoring problems. Now factoring also we have same format. One format is there. We have done 3-4 questions in our regular batch. Say every question can be solved in this format. We will run through this format. Don't worry about I've written too much story. It looks big. Quite easy only. It's like format. Yeah. FM is full of formats. Now people, first keep an open mind. First I will quickly discuss this with you. Then we'll apply. It's better learnt with numbers, but I'll still make an attempt at theory level first. Now people, first this is a working note, okay? We need to do a working note. What are we selling to the factor? Sales or debtors? As an entity, we are selling to the factor sales or debtors. That means first we need the debtor value. They will not give you debtor value. They will give you sale value. From sales, can you find out debtors? From sales, can we find debtor? Yeah, how? Sir, sales will be on a 12-month platform, whole year. But debtors, will you give 12 months credit or lesser? That means tell me the formula, what is that? Take the annual credit sales, so divided by 12, 365 or 52. Into what? We need the factoring period. In some problem, they will give factoring period. That's the first priority. If that is not there, you will take the collection period. Okay, sir? That way you will get the debtors. Any problem? No. Now factor will pay full amount. No. Usually in these sort of problems, because factor will get the money later, no? So they will say there will be some reserves. Reserve means currently withholding the money and releasing it later. That reserve could be 5%, 10% or whatever. So they will mention in the problem. So reserve is 10%. If it is 10%, what do? Take the debtor value and multiply 10%. You will get the reserve amount. Easy. Fine, people. Clear so far? Similarly, will factor do all this activity at free of cost or factoring commission will be there? So minus commission you do. Commission, let's say, is 10%. So debtor, whatever debtor value you have got, multiply the commission rate. That will be given to you in the question. You will get the commission amount. Now in factoring arrangement, what will happen is, now you think, factor will first pay the amount to us and then recover commission. On one hand, a factor will pay, another hand may recover commission, or both will be net off. Net off. So when we sell the debtors to the factor, full money will not be given. From that, first what will be reduced? Commission. Again, what will be reduced? Reserves. And then you will get what? The amount which the factor is ready to give it as advance. The amount which the factor is ready to give as advance. This is the amount available for advance, we will call it. Okay, sir? Alright. Usually in our examination problem, there will not only be commission, there will also be a interest. Because factor is giving you the money in advance. No? In our previous case, we had to collect the money after 90 days. But factor is giving the amount immediately. So hence, there will also be some interest. It's a negotiation. Practically, interest may be there. It may not be there. But in all our examination problem, interest will be compulsorily there. How do you calculate interest? Is take the amount available for advance, multiply by the interest rate which will be given to you in the question, multiply by the factoring period which will be given to you in the question. So just period, whatever. I'll tell you this with numbers again. Now this also, in factoring, no, every payment collected upfront. Now that means factor will not give this much amount. Factor also has to collect interest from us. So interest also will be deducted and the balance will be the amount advanced by the factor. I know that fully you might have not got it if you're learning in the first time. I'll take you through the numbers. It will get better. Fine. Now this is one working note we need before we evaluate the factoring proposal. Now when you do the evaluation of factoring proposal, due to factoring proposal, there will be some benefit also, there will be some cost also. There will be benefit also, there will be cost also. First, benefit. Now people, in all our problems, the assumption is it is without recourse factoring. It is what factoring? Without recourse. Without recourse ka another name is non-recourse. That means, tell me, original seller will bear bad debt risk or factor? That means bad debt risk I have or I have avoided. One loss I have avoided by doing what? Factoring. So this is a cost for me or a benefit for me? One loss I have avoided means it becomes a benefit. So first benefit due to factoring is savings in bad debts. They will give it to you in the problem. Okay, sir. But do keep in mind before you do this particular statement, no? In this statement, every number has to be on an annual basis. It has to be on what basis? Annual basis. But factoring period may be 40 days, 50 days, 60 days. But whatever number you put in this particular statement, every number should be on what basis? Annual basis. Why? I'll tell you in a bit. Do not forget that. Most of the bad debts or good debts and all will already be on an annual basis. If it is not there on the annual basis, you need to convert. Why? Last step may I'll tell you, or when the question may I'll tell you. First, you will take savings in bad debts. Next, people before factoring, we had to call up the debtor and ask for payment. That means to collect the money from the debtor, we had to have a person. We had to have some telephone charges, courier charges, person salary. All these are administrative costs to collect the money from debtor. Now we have to collect the money from debtor or factor will collect. So all this cost will come or saved. So there will be some savings in the collection cost or administrative cost. It will be given to you in the problem. Take that. Done now. There is one more. This comes in some problems. Majority of the problem it will not come. If due to factoring, if there is any reduction in the collection period, you'll have to calculate this. I'll talk about this maybe after one problem, leave this. So basically these two are the benefits that usually you get in the problems. Okay. Now, only benefits will be there or cost also will be there. Two costs we have already identified. Tell me what are those? Interest to commission. Interest to commission. Reserve. A reserve is not a commission. A reserve is not a cost. Reserve means temporarily factor is holding this money. Later factor will give it off. So this is not cost. It's temporary holding. So what is really cost? Commission and interest. But this commission and interest we have calculated for the factoring period. But here we need on factoring period or annual basis. Annual basis. So annualized commission you have to take. Annualized interest you have to take. How? I'll tell you in a bit. And sometimes there will be due to factoring, they will say we have to incur some one-time cost and all. It will be there. Some other cost. If it is there, it will be given to you in the question. If it is not there, no problem. So this is your benefit. This is your cost. If benefit is greater than the cost, if benefit is greater than the cost, that we call it as net annual benefit. If this is positive, straight away what you will do? Accept the factoring proposal. If you don't get net annual benefit, if you get rather net annual cost, when it will be net annual cost? When cost is only more than the benefit. If it is net annual cost, we can't reject the factoring proposal. We have to calculate something called effective cost of factoring. Effective cost of factoring. That's given by the formula net annual cost divided by amount advanced by the factor into 100. Or in simple terms, you remember cost of debt? What is the formula? Cost of debt to cost of capital. I told one simple way to remember that formula. What is that? Payment by interest. Payment by interest. Here, net annual cost means this is the payment you are giving to the factor. And what did the factor give to us? Amount advanced by factor. So, payment divided by receipt. Payment is our net annual cost. Receipt is amount advanced by the factor. That if you do, you will get something called effective cost of factoring. Based on this, we will be able to decide that. I will take you through one question. Better understood. I know that still, if you're doing first time in this format, you might have not understood it. No worries. One question we will run through. Easy only this is. Can we go through one question? It's a case-based scenario. It came in MTP1. Currently in our study material, the factoring questions are very straightforward. It's a net annual benefit case. So that means few working notes we can avoid. I don't want to take that up. So in MTP and RTP, they had asked a couple of good questions in factoring. So I'll take up this and we will review this question. This is a good question to review the factoring wala solutions. So check everybody. Just keep your calculator. Easy only it is. Any industries, so they are in manufacturing and that's blah blah waste. We will go for relevant information. Total sales, 200. Sir, we are doing factoring. Factoring comes on total sales or credit sales? Do you know credit sales? How much? 80%. Take your calculator. How much is credit sale? 200 ka 80%. 160 lakh. This is your total credit sales on or rather annual credit sales. Agreed. Okay. Let that number be there. The company has a credit policy of 2/40 slash or 2/40 net 120. What does it mean? 2% discount we will give it to our debtor, provided debtor pays us within 40 days. Else they have to pay us within 120 days. Now some people will go for discount option, some may not. So average collection period, will it be 120 or 40 or something else? Something else. Check, have they given? Past experience of the company have told that on an average 50% of the customers will go for discount. Balance will pay us within 120 days. So usually average collection period will be given. Here given or not given. That means we need to find. How do you find ACP? ACP means average collection period. Now people, in order to get the discount, debtor has to pay us within 40 days. What percentage of debtor will go for this option? 100% or 50%? Okay. And what about the balance 50%? They will pay now or in 120 days? They don't want discount means they will pay within 120 days. So how much is this? 20 plus 60, 80 days, huh? Yes, everybody. So average collection period is 80 days. Average collection period is 80 days. Correct. Got it. If they have given means we will take it. If they don't give us means we will have to calculate. Here not given, so we calculate it. How? If you want once again, if what percentage of the customer will go for discount? 50%. In order to get the discount, customer has to pay us within 40 days. So 40 days, few of them will pay. Few of them will pay within 40 days. What percentage of them? 50%. Hence 50% ka 40. What about the balance 50%? They want discount or they don't want discount? If they don't want discount, they will pay within 120 days. So 50% of the customer will pay us within 120 days. So both are there. Hence add, you will get average collection period 80 days. Any problem? No. Okay, move along. With escalating costs associated with in-house management of debtors coupled with the need to unburden management with the CFO is examining factoring. Now they're thinking, should we go for factoring or not? A goal they're giving. Whom will read all that? Firm is spending 2,40,000 per annum to administer the credit sale. Currently, to follow up with the debtor and collect the money from them, how much company is spending? 240. Now, if you go for factoring, should we follow up with the debtor or not required? Who will do this activity? Factor. So this cost we will incur or we will save. This is a benefit. You remember in that statement, every number we should express on annual basis. This 240 is already on what basis? Annual basis. These are avoidable cost. If you go for factoring. So this is what? Benefit. So let's go to our factoring statement. And savings in administrative cost, 2,40,000 benefit. Take da. Correct. Okay, come back. Next, what they gave. Okay. The main elements of factoring proposal are: factor will charge 2% commission. It will pay advanced against receivable at an interest rate of 18%, withholding 10% as a reserve. So two costs we have identified: commission, interest. Both are there. Reserve is not really a cost. It is just a temporary hold up. Later it will be released. Fine. Company has an option to take long-term loan at what rate? 15, or working capital loan at 14%. 1 minute, people. If this we did not read. Financial controller has estimated bad debt loss how much? 1%. Now, people, what is the assumption we make? It's a with recourse factoring or always without recourse? If they don't mention anything, we always assume that it is a without recourse factoring, or another name, non-recourse. If it is without recourse or non-recourse means, should we have to bear this bad debt risk anymore, or factor will take it up? Factor will take up this loss. That means one loss I will incur or I will avoid. One bad debt loss I can avoid means it's a cost due to factoring or a benefit. Benefit. But people, this is 1% of sales, 1% of credit sales. 200 lakh is your total sales. 80% of that is credit sales. So if you do this, you'll get 160 lakh. 160 lakh ka 1%. That is your bad debts. Clear? How much is that? 1 lakh 60,000. Cost or benefit? Sir, annual, sir. Yeah. 200 lakh was what sale? Annual sales. 200 lakh ka 80% if you do, you will get annual credit sale. Annual credit sale ka 1% if you do, obviously it is what? Annual savings and bad debts only. How much? 1,60,000. Yes, sir. Both these numbers are already on annual basis. Yes, no. The sales is an annual basis. So, need a minute? Can I move forward? Okay. Now, to cost we have identified. The funda is that only. Should we take up this factoring or not? They've asked MCQs. We'll read the MCQs later. First, we will think of it like a normal problem and solve. Now, people, this is your evaluation. This is your answer in a way. Okay. But before to get this answer, we need to prepare one working note. Remember working note number 1 mein, again, are we selling sales to the factor or debtors? Debtors. Okay. Debtors will come due to total sales or credit sales. Take a calculator. What is your credit sales? 160 lakh. Directly I'll write 160 lakh. Here they have given the data in months or days or weeks or days. And are they asking us to assume 360 somewhere? Yeah, here. Consider how many days in a year. 160 lakh is a data for how many days? 360 days. But on an average, our collection period is 360 days or 80 days. First priority is factoring period. Have they given factor period? No. That means we will use average collection period next priority. So for 80 days, what is the value? For 360 days, the value is 160 lakh. For 360 days, the value is 160 lakh. Yes, no, people. For 80 days, how much is the value? Why 80? Why 80? Collection period. Debtor will come due to collection period. No, we are trying to find debtor balance. Using sales, we are trying to find debtor balance. 160 lakh is the value for 360 days. For 80 days, how much? 30? 35.55 lakhs. Here this number. Got it? Now, will the factor give us full money or first commission? How much commission factor they told they will charge? 2% commission. Calculate. The debtors ka 2%. 35 lakh ka 2%. 71,111. Done now. Now, will debtor pay us 35 lakh 111 or first he will deduct commission? Commission. That's it, or even reserve is there. How much reserve? 10%. This 35 lakh 55 ka 10% only you calculate. Both these are calculated on this number only. 35 lakh ka 10%. 3 lakh 55, 555. Correct? So that means how much advance factor is ready to give? 31 lakh 28, 889. Till here, anybody, any doubt? Number wise, all are okay. Will factor give this much amount or one more deduction is there? Interest. Interest. How much interest rate? Check the question. How much interest factor is collecting? Where we saw? Here. Factor will pay the amount after withholding an interest of 18%. Take a calculator. How much is the amount available for advance? 31 lakh 28, 889. Okay. Is factor giving this amount or interest is there? Take this number and multiply 18%. Okay. Take this number and multiply 18%. Done. Done now. But this 18% is for whole year. Now, why is, if you want to know the logic of interest, why is factor collecting interest is? Think from factor's perspective, not company. Think from factor's perspective. What is the average collection period? 80 days. Factor is giving the amount now, but factor will get the money from the debtor after 80 days. Factor will pay the seller now, but factor will collect the money from debtor after 80 days. That means money is getting blocked for the factor for how many days? 80 days. If the factor had collected the money immediately, factor would have invested and earned how much return? 18%. Now factor is getting this or lost return. Now that means for factor this is a loss. No. Will he let go of that loss or recover? But this 18% is for full year. 18% is for the full year. Factor lost full year's interest or only 80 days ka. Hence into 80 divided by 360. Okay now people. Hence if you want it as formula, tell me now this is same thing. I've written it as formula there. That's the reason it looks big. With numbers it is very easy. Now construct your formula for me here. Tell me interest. How do you calculate? Amount available for advance into rate by 100 into first priority is factoring period. Factoring period if they have not given means collection period, ACP. Divided by 360, 365 or whatever as per the problem. You will get this. Will factor recover this interest from this later on or everything now only? So from this 31 lakh 28, 889 factor will deduct this and finally give us how much advance? 30 lakh 3,733. Now this is the first working note. Everybody okay now? You want me to take you through once again or comfortable? Okay. Now people, now we have identified two costs from this working note. Commission and interest. But the problem is both this are on which platform? See, you calculated commission on debtor. Debtor was on how many days platform? 80 days. Interest you calculated for 80 days. But this statement, every data should be on what basis? 80 days platform or annual? So reconvert. So very simple. Commission 71,111, or maybe I'll use this. Commission is 71,111 for how many days? 80 days. Why 80 days? You calculated the debtor only as 80 days. No, average collection period is 80 days. Correct? So 71,111 is a commission for 80 days. How much for 365 or 360? What did they say? For 360, how much is the commission? 71,111 is into 360 divided by 80. How much is that, people? Huh? 3,20,000. Got it, huh? Same goes for interest. Same goes for interest. How much is this interest? 1,25,156. This interest you calculated for how many days? 80 days. Now we want it on annual basis. Annual means 360 days. For 360 days, how much is the interest? 1,25,156 into 360 divided by 80. 5,63,000. Fine, people. Any other cost they have given in the problem? Sometimes they will say some one-time cost and all will be there. Given or not given? Not given. So 2 benefit, 2 cost. That's it. Give me the total benefit. That's it. I'll tell you why we bring it on annual platform. First, let's go ahead a little. To both the benefit, if you add, what are you going to get? These two addition, if you do, you'll get total annual savings or annual benefit, you can call. How much? 4 lakh. What is the similarly total annual cost? These two addition. 8,83,202. Happy or sad face? Sir, benefit savings is only 4 lakh. Cost is 8 lakh. That means cost only is more. So it's a net annual benefit wala case or net annual cost wala case? Net annual cost wala case. Simply do A minus B. If it's positive number, net annual benefit. Negative number, net annual cost. Format will take care of it. So 4 lakh minus 883,202. What are you getting? Negative 483,202. That means this is a net annual cost. So due to factoring, we are getting a benefit or we are incurring more cost. How much extra cost you are incurring? 483,202. Now this is extra cost in amount. No? This is extra cost in amount. I want it in percentage. I want you to express this in percentage. Here extra cost is in amount. Express the same in percentage. How do you find cost percentage? KD, simple formula. Payment by receipt. Payment by receipt. How much are you paying? 483. What did you receive from the factor? This much. So divide these two. Hence effective cost of factoring ka formula. Tell me now. Net annual cost divided by the amount advanced by the factor. Or simply payment divided by receipt. So do that. 4,83,202 divided by 30,03,733. 4,83,202 divided by 30,03,733. How much, people? 16.08%. That's formula. Once again, I've written it for you here. Net annual cost divided by amount advanced by the factor into 100. Till you're good. Yes, everybody. Sir, one minute. If it is net annual benefit, you don't have to calculate this because you don't have cost percentage. It's a benefit case. If it is net annual benefit, straight away you'll write a decision. What is that? Accept. If it is net annual cost, don't say reject. Don't say reject. First calculate what? Cost. You got net annual cost in amount. No, express that in percentage. That only we're calling it as effective factoring cost in percentage. Why do we do this? Sir, we need money. First of all, why are we thinking we will go into factoring? We need money. Will anybody give money at free of cost? Same money if you collect it from bank will charge interest. Same money if you collect from debenture holder, they will charge interest. From equity shareholders, there is cost of equity. So that means factoring also can have a cost. Factoring can also have a, what is factoring ka cost? 16% on an annual basis. Sir, if you don't want to take money from factor, option for you is to take money from bank. Option for you is to take money from bank, and bank charges how much interest rate, Prabhu? 15% for long term loan, working capital loan 14%. That means now factoring reject. Factor is charging 16%. Bank is charging only 50. Now understood the decision rule. Tell me in sentence, let's see. If it is net annual cost, first find it out in percentage. Compare this percentage with the banker rate. Compare this percentage with banker rate. If bank ka rate is lower than factoring ka rate, or rather if factoring ka rate is, if it is greater than banker rate, then reject factoring, go for bank loan. Suppose this factoring ka cost you found out and you got it as 10%, then bank is charging 14 or 15, factor is charging only 10. Now you will go for, that is what is the decision rule. Since effective annual factoring cost 16% is greater than bank rate, reject. If it was other way around, accept. Okay, Naji. Now, next question. Sir, why do we get everything on annual number? Because this bank rate, no, 15% or 14%, it is not for 80 days, it is for annual. 80% ka rate, can you compare it with whole year ka rate? No. Hence, we get every number on what basis? Annual basis. Then only you will be able to calculate annual cost of factoring, which you will be able to compare and take the decision. That is the logic of annualizing the numbers. Easy, pakka, that's it. This is the whole or the funda of factoring. Format will take care if you don't want to take too much load. Okay, now people, that's the reason we have written it. But let's see. Give me a quick recap. Only factoring alone. Yeah, yes, Allah. You should tell. Yeah, you're waiting for me, I'm waiting for you. So, okay, I'll only tell. First, people, one working note. What are we selling to the factor? Debtors. First, find debtors. Debtors you will calculate with the help of credit sales. So, take credit sale divided by 12, 52 or 365 multiplied by the factoring period. First priority missing means ACP, average collection period. You will get debtor. Will though we are selling debtors to the factor, will factor pay full amount or he will deduct two things? What are those? Commission, interest. It will be given. Our commission will be straight away percentage. Or reserve also will be straight away percentage. Reduce that. You will get amount available for advance. Will factor give this or one more? One more, which is what? Interest. Take amount available for advance. Calculate interest rate. But that interest rate will be for whole year. Is fund getting blocked for factor for whole year or factoring period? So that means what is the formula for interest? Tell me. Amount available for advance into rate by 100 into factoring period divided by 360 or 365. Factoring period missing on there. Average collection period. Okay, now so reduce this interest. You will get the amount of advance given by the factor. Okay. Then the evaluation statement. Every number in the evaluation statement should be on an annual basis. Benefit to cost to. Due to factoring, you will get few benefits. One is bad debt you can avoid. Bad debt loss you can avoid. Then some administration cost you can avoid. Those two are your benefit. By totaling up, you will get the total annual benefit. Then there will be cost. Cost are usually two things. Commission, interest. But both this commission and interest is on annual basis or factoring period. So first annualize them. Get them on annual platform. So you'll get the annual commission and annual interest. Any other cost if it is there, bring it in. Compare benefit with your total benefit with your total cost. So if your benefit is greater than the cost, then you'll get net annual benefit. Then straight away factoring proposal accept. If benefit is lesser than the cost, then you'll get net annual cost. In that straight away reject or factoring cost percentage. First find factoring cost percentage. Simple, payment divided by receipt. What are you paying the factor? Net annual cost. What are you getting from the factor? Amount advanced by the factor. So the formula for effective factoring cost is what? Net annual cost divided by amount advanced by the factor into 100. Compare this particular factoring cost with your bank rate. If factoring cost is lower than bank rate, accept factoring. If factoring cost is greater than bank rate, reject factoring, take a loan from bank only better. That's all. That's what I've written here as theory. I think it's sorted now. So it's fine. No? Okay. Last 5 minutes. Small is there for credit or management. We'll finish off this and we'll leave. Creditor management is a 2-marker question. Majority of the time is it doesn't come. If it comes, 2-marker adjustment somewhere in some case they may fit. What is creditor ka drama is, till now we were evaluating whether to give extra credit to our debtor. In creditor management, what is a pain point or point of concern is, creditor is ready to give us some discount to us. Creditor is ready to give us some discount to us, provided we pay on the credit date or earlier. Creditor is telling us, if you make an early payment, I will give you discount. Okay. Now the question here is, should that discount offer be accepted or should that discount offer be rejected? That's a problem. Okay. That too, one simple formula is there. Annual discount is a benefit, no? So you have to annualize it. Annual discount benefit percentage is given by the formula D divided by 100 minus D into 365 divided by T. Since you want it in percentage, finally you will multiply by 100. What is it? D divided by 100 minus D into 365 divided by T, finally multiply by 100. D here is for discount. T here is for early payment days. How many days you need to pay early to get the discount? 5 days early, now 10 days early, now how much? That is your T. T is not total period. T is the pre-payment days or early payment in days. So do this, you will get the annual benefit discount percentage. Then you can take the decision. I'll take you through one quick question on this, 5 minutes. And then we can say, whatever. Where is it? Here. Okay. It's a study material question only. Question number 34 in our class notes. Oh no, it's an RTP question rather, not study material question. Now, A Limited is in the manufacturing business and it acquires raw material from X Limited. Fine. As per the terms of the agreement, payment are to be made within 40 days. So creditor is giving how much credit period to us? 40 days. However, A Limited, we are buying, no, we are A Limited here. We have a choice. What choice? Of paying 98.5 per 100 rupees. A Limited has a choice of paying rupees 98.5 per 100. That means instead of paying 100, we have a choice to pay 98.5. That means we will get how much discount? Correct. It owes to X. But in order to get this discount, you need to make the payment before 10th day. Normal, what is a credit? 40 days. In order to get the discount, we have to pay within 10th day. So how many days early we need to pay? T people is early days. Normal credit 10 days. To get the discount, we have to pay before on or before 10th day. So how many days early we need to pay to get this discount offer? Instead of paying on the 40th day, we have to pay on the 10th day maximum. So we have to make the payment how many days early? 30 days early. That is your T. Agree now? Now substitute in the formula. Simple. What is the formula? D divided by 100 minus D into 365 divided by T into 100. D is discount. Instead of paying 100, we are paying 98.5. How much is the discount? 100 minus 98.5. 1.5. Divided by 100 minus D into 365 divided by T. T is how many days early are you paying? Instead of 40 days, we are paying on the 10th day. So early payment is 30 into 100. How much? 18.52 percentage. Okay, people. That means you're getting a benefit from creditor. You're getting a benefit from creditor. That benefit, if you express on annual terms, like factoring, you expressed on annual terms, no? Same creditor ka benefit, if you express on annual terms, how much is the benefit percentage? 18%. Read one more line. Examine whether discount offer should be accepted. Provided average billing is 10 lakh. We don't have to pay 100 rupees to this creditor. How much we have to pay? 10 lakh. Alternative investment gives how much return? 15%. Now check, people. If you take up the discount offer, how much annual benefit we are getting? 18%. Now I have money. I have extra cash. If I have extra cash, I can use this extra cash to pay the creditor early and take up discount offer. If I take up this discount offer, what is my annual benefit percentage? 18%. If I don't take up discount offer, what will I do with this surplus money? Invest. If I invest, how much return will I get? 15%. Now you tell me, as a finance manager, what would you recommend? Investment is giving a return of only 15. Creditor ka benefit percentage looks like 18, which is better. So what is the decision rule? What is the decision rule in sentence? Final decision rule here is accept. But in sentence, if I ask you, what is the decision rule for discount offer? What you will say? If the annual discount benefit percentage, if it is greater than investment ka return, if it is greater than investment ka return, go ahead and accept the creditor ka discount option. Suppose the annual discount benefit percentage was 12%. How much is it? Instead of 18, if it was 12%. If you save money, if you invest in investment, how much are you getting? 50. Now you will go for discount option or investment option. So your discount will be rejected. Clear, sir? Everybody good? That's all this is. Now, why do we get this on an annual platform? Is this investment percentage will be on annual. Hence, this also, there's a simple formula. I had explained you the logic of this. Now, I think you don't need all that. This is okay. No? This is basically a formula which is annualizing the benefit. Okay, which is annualizing the benefit. Or if you want 2 minutes, I'll tell you that. GP percentage, tell me people. GP percentage, tell me. GP by sales into 100. Same way, here instead of paying 100, we are paying 98.5. How much benefit you are getting in value? 1.5. 1.5. Because we are paying 1.5 rupees less. This is your GP. Think on like GP terms, easy. GP divided by sales. How much are we paying the creditor? Really 100 or 98.5? So that means what is the percentage? Tell me this. We are getting a benefit of 1.5 by paying 98.5. How much is this? 1 point. This is the benefit. This is the benefit. But for whole year or for making 30 days payment early? For making the payment 30 days early, you are getting a benefit of 1.52 because you will get the benefit only if you'll get this discount only if you pay the creditor how many days early? 30 days early. Now annualize this. 1.52 percentage is a benefit for whole year or 30 days. 30 days. Now this investment percentage is on 30 days platform or 365 days. So hence annualize. 1.52 percentage is a benefit for 30 days. For 365 days, what is the benefit? Calculate. That's all is formula to calculate. You don't need actually formula. But in exam, answer in formula only. Don't write like this. Because people will not understand. They'll think you copied. Because the invigilator will not know. They will only refer the ICA ka suggested answer will always be in formula. So write in formula only. So this way only you will solve an exam. What is that again? D divided by 100 minus D into 365 divided by T into 100. Okay. If you don't want to solve on 100 platform, you can also take full amount and solve. Full amount also you can solve. I've showed it here. If you want it, ideally better to solve like this. So, but this also I've solved it. You'll get the same answer. I'm just showing you. If you want, you can use that as a reference. Or exam may just follow this. It's fine. Okay, people. Either you can take 100 and platform and solve, or you can take full value and solve. Answer both case will be same. It will not change. Okay. Now what do we say? Expected breakfast breaker. Okay, people. I think with this working capital management, whatever we had in plan, we have completed. Thank you for your time and patience. Bye bye.